Good evening, my dear students. Welcome to the live coaching classes conducted by the Board of Studies, ICI. The live coaching classes has now been a very integral part of the students' life as well as my life also to some extent. Right from the COVID time 2020, this initiative was started on a very serious level by the CA Institute, and I have been privileged to be part of all the batches right from 2020. So it has been a very good journey for me interacting with students across the country. I am CA Vignesh Suresh. I'm a practicing chartered accountant in the city of Hyderabad and also a trainer in GST. Have trained multiple students in the CA background, CMA background, company secretaries, as well as the GST departmental officers in the subject of GST right since 2017. So I hope all these classes add value to you, and I hope they aid you in the preparation for your examination. To give you a brief, indirect tax laws is paper 8 in your CA final, and it is a very scoring subject. So why is it a scoring subject? The main reason for the high level of scores we can expect in this particular paper is because 80 marks are dedicated to your goods and service tax and 20 marks are dedicated to your customs and foreign trade policy. So 80 marks are therefore devoted to a subject, goods and service tax, which has been in existence only since the past 6 years. So therefore, over the past 6 years, multiple changes have occurred in the provisions. Multiple provisions were changed, modified, and amendments keep happening on a very fast basis. Every quarter, there is some amendment or the other in the GST laws. That is because it is a new law, and the moment a new law is introduced across to the citizens of the country, it is imperative that there are changes, because we have to see how the citizens of the country approach and how they take acceptance to a new law which is being imposed. So therefore, however they take based on the feedbacks received from various trade associations, the provisions keep changing on a time to time. So therefore, we just have 6 years of legal history with regard to this, due to which the questions what the the questions what are asked in the exams are pretty recent. I mean, since it is a new law and the amendments keep happening, it is very easy to predict as to which chapters are focused on importance in your examination. So that is why it is a very scoring subject. Unlike your income tax is basically 1961. So 39 plus 23 is it is a 62-year-old law. So therefore, a 62-year-old law has multiple case laws, multiple judicial pronouncements over a period of time. Whereas in GST, that is not the case because it is only in effect since 2017. So therefore, the first topic what we are going to cover is GST in India. What exactly is this concept of goods and service tax? How it is charged on the respective goods and services? What was it earlier and what it has become now? These are some of the intricate topics what we are going to cover. So before we go into the, let me just open the query link to see if there are any queries. Yeah, good evening, everyone. I see a lot of attendance today. Good, nice to see all of you. But it's only a single request from my side is to please attend all the classes. Please let's not attend few classes and then not be present. I want all of you to attend. I've been assigned totally 6 to 7 sessions in this particular attempt. So therefore, I want you to be a part of all the sessions which I take and also what my co-faculties are going to take. So before we get into the actual concept of GST and what exactly it is, it is very, very important for us to understand what is the difference between a direct tax and an indirect tax. So therefore, you must have seen this in your IPCE level also. When indirect tax laws are taken up, on direct tax laws taken up, the first thing what is discussed is what is a direct tax and what is an indirect tax. A direct tax is basically something which is imposed on the individual, and the individual directly pays it to the government. A classic example of a direct tax is your income tax. You earn the income and you calculate the taxes on that, and you pay it directly to the income tax department by way of filing of the income tax return. Whereas in indirect tax, the burden is shifted from one person to the other. That is, since it is a tax on a product or a service, a direct tax is your tax on your income. It is a tax on a particular thing where the individual directly pays to the government. Wealth tax was there earlier. That also was a direct tax. You have some amount of wealth, you have to pay the tax on that. So that was your wealth tax. So that is also an example of a direct tax. Whereas here, indirect tax, the tax is chargeable on the particular product or service. So therefore, if you're looking at a phone, for example, in this particular situation, when the phone is first produced, manufactured, and comes to the retailer, then what you do is you go and procure the phone from your supermarket or your showrooms, etc. So if you procure the phone from there, what happens here? You pay the GST on the phone to the particular retailer. That means ultimately you're the person who is paying the tax. But do you pay directly to the government? No, you pay it to the retailer. Retailer in turn pays it to the wholesaler. On the margin, he pays the tax to the government, and right up to the manufacturer, it goes on the same line. So therefore, if you see, the burden of paying the tax is shifted from one person to the other. That is, not one single person doesn't pay entirely to the government. As in, you are a consumer, so you pay the tax totally. There is no doubt about that. But you don't pay directly to the government. What you do is you pay it to one person, and that other person, through a chain of processes, in stages, the burden is passed from one person to the other. Thereby, it goes to the government. That is what is the concept of an indirect tax. The second important point what we have to discuss is it does not matter as to what is your income or what is your wealth to determine what is the tax which is required to be paid. In income tax, what has to be done here is whatever income you earn, if your income is higher, your tax becomes higher, correct? You go into the next set of slab rates, then enters your surcharge and education cess and all the other things. But in an indirect tax, it purely depends on the taxable event. It doesn't depend on your income or wealth. Whether you have 100 crores or whether you have just 5 to 10 lakhs, when you go and purchase an iPhone, the price is the same for you as price for anyone who has 100 crores and who has just 5 to 10 lakhs. The price what he pays for the iPhone is one and the same. So that means what happens here, it all depends on the taxable event. That is, the supply of goods or services is the taxable event in GST, which we shall cover in today's session, as well as, so therefore it all depends on the taxable event, whereas the direct tax, it depends totally on your income or wealth. Another important point in direct tax is the tax is collected in one single stage. That is, when you calculate your income and when you calculate the tax, the tax is applicable. Of course, there is a concept of tax deducted at source and advance tax, but those are just something like your installment facilities, which so that during the period of 1 year, the government does not lose any collection. So for that point of time, those are there. But otherwise, in the single stage, the tax is collected. Whereas in an indirect tax, the tax is collected at different stages. Once with the manufacturer stage, wholesaler stage, retailer stage, it is collected. Then there is no question of input tax credit in direct tax. What does it input tax credit mean? See, in a direct tax, it is very simple. What is your income? You pay the tax on that. The matter is closed. Whereas in indirect tax, let me take an example. If you are a trader in furniture, what you do is you purchase from the furniture manufacturer. You purchase all the tables, chairs in bulk quantities, say 200 units each. You take your shop premises on rent and you store them there. When I, as a consumer, I don't go to the manufacturer, because the manufacturer will have a huge factory with various components in place. So I would want to go to the retailer where I can see the final product, sit on it, see if I like it, and then purchase it. So I go to this retailer. So retailer sells it to me. Fine. So what? Let's take an example here. One chair, the retailer purchases from the wholesaler at say 5,000 rupees. Okay, on 5,000 rupees, 18% is the GST which is applicable. So he purchases from the wholesaler at 5,000 rupees, paying 18% GST, which is 5,900 rupees. He pays it to the particular wholesaler. Then he sells it to me, because he is ultimately hiring a place. He is hiring few staff. So therefore, it is obvious that he will have a profit margin to that. Therefore, assuming he has a 10% profit margin on the cost of the furniture, which makes it 5,500. So 5,500 is the price at which he sells it to the customer. I buy it at 5,500. So on 5,500, 18%, that is 990 rupees is the GST what I pay to the retailer. But he has already paid on 5,000 rupees, that is 900 rupees. So 900 he has already paid. So when he collects that 990 from the customer, what he will do, this 990 he has to pay to the government, but he has already paid the 900 by way of again GST to the wholesaler. So this 990 minus the 900, that 900 what is subtracting from the total output tax is your input tax credit. Fine. So that is your concept of an input tax credit, which is there in the indirect tax, but it is not there in the direct tax. So I hope all of you got this point between the direct and indirect tax concept. No doubt by Chitransh explained tax collected at one stage concept. It is very simple. We will do some examples where you will understand it more clearly. As of now, it is very simple. If you are a person, you are having an income of 10 lakh rupees by way of salary, you're working in an organization, per year they pay you 10 lakh rupees. I earn the 10 lakhs, I calculate the tax on that as per the slab rates, I pay to the government, file the return. So one single stage, it is over. It is only a contract between your employer and you. So there is only one single stage you have to pay the tax. Simple. But whereas in GST, it is not like that. When you procure even say a packet of chips, it has a journey right from the manufacturer to a wholesaler, from there to the retailer, from the retailer to you. It has an entire 3 to 4 stage journey which comes to you. So therefore, at each stage, the tax is collected. How it is collected, we will go through some examples in the coming few slides. Then you will get more clarity on that. I hope that is point. So this was the situation prior to 2017. Prior to 2017, what were the indirect taxes which were there? One was service tax. Service tax was on tax on supply of services. That is, if you are providing a training service, if you are providing teaching service, you are providing a CA service, or you are providing legal service, on that service tax was applicable. This was there before. Value added tax. Value added tax was on goods only, sale of goods. So when there is a sale of goods, value added tax was applicable. It is also known as VAT. This was a state law. That means each state had its own VAT law. So therefore, VAT is collected on the sale of goods. Then central sales tax. Central sales tax is basically the tax on the sale between two different states. If you are selling some goods from one state to the other, on that CST, central tax was there. Excise duty was applicable on the manufacture of goods. So if you are manufacturing a particular product, at the time of removal from the factory, you have to pay the excise duty to the government. This was excise duty at that point of time. Customs duty is import of goods from outside the country. On import of goods at the port itself, before the goods are shipped, the customs duty is collected from the respective dealer. So therefore, these are the various indirect taxes which were there at one point of time before 2017. So the main agenda of the government, the main idea of the government in bringing GST into the country was to make sure and merge many of the various indirect taxes which were prevalent at one point of time. So therefore, service tax is merged in GST, goods and services tax. So therefore, this tax covers both goods and services. Since goods are covered, value added tax is merged, central sales tax is merged, excise duty also is merged in GST, right? Customs duty is still there. In customs duty, there are different types of customs duty. One is your basic customs duty, additional customs duty, and countervailing duty. In this, what happens? The basic customs duty continues to exist. Countervailing duty and additional customs duty are now merged in GST, right? So different types of GST will again cover that now. So prior to GST, these were the various laws which were there. Now, to some extent, customs is very much continuing. Excise is there in respect of certain products like alcoholic liquor for human consumption. Alcoholic liquor for human consumption, there is no GST applicable. The taxation is left to the states only. The states collect whatever taxes. So excise duty is applicable on alcohol for human consumption. On that, the tax collect the respective states collects the excise duty. Fine. So that was your this thing. So what is the genesis of GST? Theory question, you can example how it all started. In the year 2000, the first concept of GST was suggested by then Prime Minister. A committee was set up to design a goods and service tax model for the country. In 2003, a task force was formed on the fiscal responsibility and budget management. 2004, strong recommendation of fully integrated GST on national basis was given. Union Finance Minister Chidambaram, when presenting the budget, announced that from 2010 April, GST was introduced, but due to various political, because GST to be introduced will require the cooperation of 29 states, which is not a joke at all. Okay, so many states have to cooperate to only then the GST will be introduced. So since that time, the GST missed several deadlines and continued to be shrouded by the clouds of uncertainty. Because sometimes what happens, because it was a coalition government before 2014, it was a coalition government. So therefore, some parties used to support GST, some parties used to be against GST. A consensus was not arrived. Some states said they want these changes. The central government was refused to accept those changes. So therefore, due to which it kept on getting postponed. Then what happened? 2014, when the NDA government had come, because at that point of time, the NDA government, they had the proper strength in both the houses of parliament. At that point of time, the Constitution 122nd Amendment Bill was tabled. Lok Sabha passed the bill on 6th May and Rajya Sabha on 3rd August 2016. Now, this bill had to be ratified by more than 50% of the states. Only then it would be passed. So it had the ratification was done by more than 50% of the states. And finally, the assent of the president also was given. Finally, it became the Constitution 101st Amendment Act 2016. You must be wondering why the word Constitution is there. Please bear in mind the imposition of GST and the introduction of GST in the country required an amendment in the Constitution itself. Why, sir? Because before this bill was there and before 2017, the power to tax was delineated, that is separated between the state government and the central government. For example, service tax was collected by the central government. Value added tax, VAT, was collected by the state government. Central sales tax was again collected by the central government. So therefore, which government had to collect which taxes was specified in the parliament. So states had particular authority on certain taxes. The center had particular authority on certain taxes. So that is why this delineation was there. Due to this delineation, what had happened was the constitution had to be amended. Only then the GST could be imposed. So therefore, in this particular situation, the constitution was amended, which again paved way for the introduction of GST in India. So what were the amendments in the constitution? That also we will see now. So therefore, 2017 on 27th March, Central GST legislation, CGST 2017. See now, therefore, in GST, it is not like there is only one act called GST Act, not like income tax. Because why? All the states also have the power to tax. Because GST, it is not like a single law, single tax. Central goods and service tax is there, state goods and service tax is there. State goods and service tax collected by the states, central goods and service tax collected by the center. And apart from this, there is an integrated goods and service tax also when the transaction is there between two different states. So therefore, in this particular situation, integrated goods and service tax was levied. So therefore, 27 March 2017, Central GST, IGST, which is integrated GST, Union Territory Goods and Service Tax were introduced in the Lok Sabha. The Lok Sabha passed these bills on 29th March 2017, and with the receipt of President's assent on 12th April 2017, the bills were enacted. I hope this is clear. So this was your April 2017, the bills were enacted. Then apart from the Central Act, so these are the integrated goods and service tax, the central goods and service tax or Central Act. Now, each state had its own state GST Act, which is nothing but the same as the central goods and service tax. But since the authority was also given to the states, they will have their own act also. So on certain minor things, the states also made some changes which are not there in the center, which is not relevant for us from our examination point of view. Purely the CGST Act 2017 only is relevant, right? So therefore, state laws were there. And by 30th June 2017, apart from Jammu and Kashmir, all the other states who put their respective acts from 30th June 2017. Later, Jammu and Kashmir also came. So 1st July was the date on which the July came. Jammu and Kashmir introduced with effect from 8th July 2017. From this particular date, the GST law was levied in the country. So therefore, what is the concept of GST here? It is a path-breaking indirect tax reform, which has subsumed. What do you mean by subsumed? Merged. It has merged multiple indirect taxes. So it is a path-breaking reform, which is something of a kind, because prior to 2017, multiple indirect taxes led to a lot of confusion. People who had to get registered under VAT, they had to get registered under service tax, they had to get registered under central excise. Multiple registrations, multiple compliances proved to be a big problem for the businessmen of the country, due to which the GST was introduced and it has merged the multiple indirect taxes. Sometimes in other countries, instead of GST, the word VAT also is used, but the concept is the same as GST itself. So GST is a single mode or a dual mode. That is, in smaller countries, GST will be only single type of GST. But India, with its multiplicity of states, could not afford to have a single GST, because the states will definitely be scared as to whether the revenue will be depleted. So therefore, because of that, the India has adopted a dual GST model, two types of GST, that is the central GST and the state GST. Yes, Mansha, you're right. It cannot never be levied on alcoholic for human consumption, specifically excluded on the Constitution. We'll be covering that article as well. There's no way, even in the future, alcoholic liquor for human consumption can never come in the GST, because alcohol is something where the states are very particular about the revenue from the sale of the product. So therefore, there was no way in which this could get covered in the GST. So therefore, what exactly is GST? It is a value-added tax which is levied on supply. Fine. Please make a note of it. The taxable event of GST here is supply. The supply is the event on which the tax needs to be levied. So therefore, manufacture or sale of goods and provision of services and consumption of goods and services, all these comes under the supply. There is a separate definition for supply, which we will see in chapter number 2, concept of supply. Section 7 of the CGST Act 2017 deals with this particular concept. So we will see this concept in great detail when we cover the chapter 2. So therefore, as simple terms, what we all have to remember, the taxable event in GST is known as supply. On this supply, the tax is triggered and it is charged. Then, if you see here, as we mentioned earlier, at each stage of supply, a continuous chains of input tax credit is available. That is, at every stage of supply, whenever the particular person has paid the GST, like if the wholesaler has paid the GST to the manufacturer, he gets the input tax credit. Retailer has paid the GST to the wholesaler, he gets the input tax credit. So similarly, at each stage of supply, the input tax credit is available. But ultimately, it is very, very clear, crystal clear, that the burden is borne by the final consumer. At each particular stage, the credit is given and the final tax is recovered from the consumer. Consumer pays the final tax. There is no doubt about that. So once the moment he pays the final tax, but it doesn't go to the government directly from the consumer, it is collected in stages right from the cycle of a manufacturer to the final consumer. There is no cascading effect of taxes. What do you mean by cascading effect? This cascading effect was earlier there. What was the situation at that point of time? VAT was separate, service tax was separate. Let me give you an example. Now, there is a situation where you are again, let us look at the trading in furniture. You procure the furniture and you sell the furniture. Apart from that, you have different expenses like say internet for your office, advertisement, mobile expenses for your telephones of your staff, multiple other expenses are there. Earlier, prior to 2017, the input tax credit was restricted only to the purchase and sale. That is, you purchased the furniture and you sold the furniture. So input tax credit you can claim only on the purchase of furniture. On all the other expenses, this trader used to pay the service tax. So he used to pay tax on that also because it was all subject to service tax. Like internet expenses is subject to service tax. But the problem was, since he was registered under VAT and this service tax input, whatever is paid on the business expenses, he could not claim and adjust it against the VAT collected on the sales. Right? So due to which what happened, all the taxes on the services what he's paying have become his expenses because he could not claim. Like for example, if you are paying the service tax on internet expenses, that service tax you cannot adjust to pay your VAT. So the service tax becomes a part of your cost itself. So therefore, that was your cascading effect of taxes. GST promised to eliminate that totally. When I say eliminate that, in case of GST, same example, this furniture guy, whatever GST is charged from the customers, he can adjust the GST what is paid on what he has purchased furniture. He can adjust the GST on the expenses. He can adjust all these particular items and pay the balance. So that is why there is no cascading effect. When I say cascade, the literal meaning of the word cascade refers to waterfall. A waterfall right from top, when it keeps falling, the water on the top gets added to the water on the bottom. Correct? So that is your cascading effect, right? So here the taxes kept on adding to the final cost. That was a cascading effect which was prevalent. But GST now has removed the cascading effect because you are eligible to all the claims of GST. Of course, it doesn't mean that on everything you can claim the GST. There are some restrictions for which in input tax credit chapter we will discuss regarding that. So those exceptions are also there which you have to see. Right? So therefore, if you look at an example here, in this particular slide, I have covered the 4 stages. The first stage is the manufacturer. Manufacturer will sell it to the distributor. Distributor will sell it to the retailer. Retailer will sell it to the consumer. These are the 4 stages of the GST which is applicable. So when I see the first manufacturer, he manufactures the particular product at a cost of 1 lakh rupees at 18% GST. Which is 18,000. He does not have any input tax credit. Why? Because he's manufacturing the product. Of course, in this example, I have not taken the GST on expenses. I'm only looking at the cascading effect which was prevalent at that point of time. One second. Yeah. So 1 lakh at 18% GST, no input tax credit. This 18% was again paid to the government. So what is the value addition here? 18%. So here, once you come to the distributor, The distributor procures from the manufacturer at 1 lakh. He adds a profit of 11,200 and he sells it at 11,000, 1,11,200. So GST at 18% of 1,11,200 is 20,016. Out of this 20,016, this distributor has already paid the respective 18,000 here. The distributor has already paid this respective 18,000. So that he will remove from this 2016, and the whatever net GST comes, it comes only to 2016. So 2016, on that the GST will be applicable. Then you come to the retailer. Here what happens? The retailer procures from the distributor at again 1,11,200, on which 18% GST 24,640. Sale price is 1,35,840, and GST at 18% here is 24,451. Retailer has paid 20,016. So net what he has to pay to the government is only 4,435. Then it goes to the consumer at assuming 1,60,291. What is the total tax which is borne by the consumer? This is 18,000, 2016, 4,435 at a time will be paid by the consumer. Consumer, of course, there is no further because the transaction ends there. So if you see here, the taxes are collected in different stages. So in this particular situation, manufacturer 18,000 is collected, distributor 2016 is collected, retailer 4435.2 is collected. This total is the tax which is borne by the consumer. I hope you got the point, which comes to 24,451, which is the total tax which is borne by the consumer. I hope everyone understood this cascading effect, how the input tax credit will be available. Can petroleum products come under GST? We will discuss this in today's session only. Presently, it is not under GST, but it is not like alcohol that it can never come in the future. Presently, it has been excluded, but there definitely chances are there that in the future, the petroleum products may come, right? So Kamaljit, I hope this point is clear for you. So what was the need for GST? Why was the GST required? Everything was going on smoothly. Why simply new regulation came from the business community? There are different anxieties, because if you are doing one thing for a regular period of time, because there are businesses which have been existing since years together, since decades together, suddenly you tell them that this VAT and service tax is no longer there, you have to come into GST. So they'll be very anxious. What exactly is the government wanting to do? Why they are putting all of this? So they have all reasons to feel anxious. So therefore, in that particular situation, the merits and why this GST is important for us needs to be clearly explained to the business community. So therefore, the deficiencies in the value-added system were a major reason for the GST to be introduced. As I told you in the example also, certain transactions were subject to double taxation. It was taxed both as goods and services. This was a very, very big problem which was being faced prior to 2017, because some transactions are there which have the character of a product as well as service. What are the examples of that? If you go to a restaurant, you order a veg Manchurian. So that is a product which you are consuming. Apart from that, the act of that particular person putting it on a plate, getting with a spoon and fork and serving it on your table, and you sitting and eating, that act of getting that particular product from the kitchen to the place where you are sitting is a service. So therefore, the state government said it is definitely VAT because you are selling it. The central government said it is definitely service tax because you are providing a service. So therefore, both the registrations were required in that particular situation. So if both registrations were required, there was double taxation also, because you are paying VAT, you are also paying service tax. So double taxation was there. Under both goods and services you are paid, and distinction was very blurred many of the times. Whether this is a good or whether it is a service was very, very difficult to ascertain. Like software is there. Software, whether it is a good or a service, in which cases it is a goods and which cases it is a service. So all the tracking and understanding were very, very difficult. So therefore, central excise duty and VAT were levied on manufacture and sale. So therefore, set off of CENVAT against state level VAT was not allowed. This was what I was telling. If you are paying CENVAT, that is if you are paying, say, excise duty, or if you are and you are collecting the state level VAT, So this excise duty could not be adjusted against the state VAT. Similarly, service tax could not be adjusted against the state VAT. This was a major deficiency because of which many expenses, taxes used to have to be paid, and the businessmen was getting burdened because of that. Then, apart from this, apart from your regular value added tax, there were other different types of taxes in the state also. Like luxury tax was one of the tax. What is luxury tax? Luxury tax is levied on hotels. On hotels where a person is spending lavishly on staying in a, say, a 5-star hotel. On that, apart from your service tax, luxury tax also was there. Now this luxury tax also is not there. That is also included in GST. Then the entertainment tax. Entertainment tax is basically on going to amusement parks, going to movies, theaters for viewing the movies. Entertainment tax was there, which was not there in VAT. So VAT was there separate. Luxury tax was there separate. Entertainment tax also was there separate. So therefore, all these were not subsumed in the VAT. So therefore, for a single transaction in multiple taxes in multiple forms were required to be paid. Like for example, if you go to a hotel and stay, you have to pay VAT on the consumption in the restaurant. You have to pay service tax on the accommodation service, and you also had to pay luxury tax to the state government because you are staying in a 5-star. So therefore, for one single transaction, different taxes were required to be paid. That is why the GST had to be introduced in the country. VAT on goods was not integrated with tax on services at the state level to remove the cascading effect of tax. As I told you, the services were service tax on services were charged by the central government. On state government, the taxes were charged on the goods. So therefore, there was no integration between the two. So therefore, there was a lot of cascading of tax which was applicable. Then CST was also another source of distortion. It was non-vatable. What do you mean by non-vatable? CST means only on interstate sale of goods, the CST was levied, whereas VAT was levied on the intrastate sale of goods. This also, there used to be a lot of cascading effect because input tax credit was not there. So these are the various reasons why the GST had to be introduced into the country. Let us look at some doubts. Being the last stage of consumer is impacted very harsh as he can't get the ITC. You cannot tell this logic, Mansha, because the reason is this particular person is consuming the product. He is not selling it to outside. If you buy an ice cream, there is no question of input tax credit because you are not selling the ice cream to someone else. You are consuming the ice cream. If you purchase a car, you don't sell it for the profit motive. You are using the car for yourself. You are consuming the goods or services. So we cannot say it is very harsh because you cannot get the ITC. ITC will come only if the purpose of usage is not yours. The purpose is to sell it to someone else. Only then the ITC concept is relevant, right? So therefore, it is not like you say it is very harsh because consumer is consuming the product. So, but ultimately, he is the person who bears the entire GST because he wants to buy that product. He wants to buy the product for himself. Consumer. The word consume is there itself in the consumer. So he's consuming the product or service. So therefore, no question of any separate input tax credit in this particular situation. Then what are the problems to be addressed by GST? These are also all some of the theory questions which are there. Comprehensive tax structure was created, covers both the goods and services. The GST was applicable on both the goods and services. Cascading effect to be removed because of GST. Why cascading to be removed? We just discussed for the last 20 minutes regarding that only. So I hope you got clarity on that. Single taxable event, another very, very problem which is addressed now. Earlier, 2017 before, every tax had one taxable event. Service tax when it will come on provision of service. VAT when it will come on sale of goods. Excise duty when it will come on manufacture of goods. So each tax has a separate taxable event. Now that problem only is gone. Single taxable event, supply. That's all. Not even sale or not even provision of service or manufacture. Supply. What is supply? We'll cover in section 7. Fine. So therefore, single taxable event is one of the USPs of GST. So how is the GST framework which is set up in India? As I told you, a dual GST model has been adopted by India. both CGST and SGST. It extends to the entire country, including Jammu and Kashmir. The center has the power to tax the intra-state sale of goods, and state has the power to tax the services. So now intra-state sale of goods, center has the power to tax, state has the power to tax the services. Types of GST, as I told you, CGST, SGST, and IGST. GST is a destination-based tax. That is, the tax goes to the destination state. If you are selling the state from one state to the other, and you're collecting the GST on the customer, the amount, the CGST component goes to the destination state. Fine. So therefore, types of GST is central goods and service tax and state goods and service tax. So in the common sense understanding in our total discussion, when I say the GST rate is 18%, that means it is split equally between the central goods and service tax and state goods and service tax. So therefore, local supply, that is within the state supply, if you are supplying any product, okay, on that both the CGST and SGST on an equal basis will be applicable. IGST comes into play when the supply happens between two states. So when between two states the supply is happening, at that point of time, the IGST is applicable. IGST will be applicable on the supply between the two states of goods or services for a consideration. Okay, consideration means for something in return. If you're doing something, you need to get something in return. On that, the tax is applicable. CGST is levied and collected by the state government. SGST or union territory, either by the state or the union territory. General rule, what you have to see when you're determining the intrastate supply. Intrastate supply means within the state. Interstate supply means between two states. When location of supplier and place of supply of goods or services are in the same state or union territory, it is treated as intra-state supply of goods or services respectively. This is your general rule. Fine. Where the location of supplier and the place of supplier, all these are not generic terms. When I say location of supplier and when I say place of supply, so that means these both are specific terms which are defined in GST. So therefore, what each thing covers, we will see once we go to the respective topics. So as of now, it is very, very simple. If the location of the supplier and the place of supply are in two different states or two different union territories, or one is in state, one is the union territory, it is treated as interstate supply of goods or services. I hope this point is also clear. So therefore, as I told you, the interstate supply of goods or services are subject to integrated goods and service tax. IGST is nothing but the sum total of CGST and IGST. So when between two states any transaction is happening, then at that point of time, IGST will be charged totally. That is, the rate is 18%. There is no further division there. Total thing IGST will be charged. Fine. I hope this is clear. Fine. Any queries before we move forward? It means all taxes is collected from the final consumer, 100%. The person who is consuming the product or the service, that particular person only will pay the tax. There is no doubt about it. Ultimately, consumer only bears the burden of whatever taxes is collected by the recipient of, by the retailer of the service. But there is a provision which is there in GST, which said that the benefits of input tax credit needs to be passed on to the consumer. How it will be passed on? By way of a lower price. That means earlier when VAT was there, when service tax was there, when excise duty was there, there was an argument which said that the tax itself are coming too high. On this tax, where I will reduce the price because the input tax credit and cascading effect was there. But now you are able to claim the credit on multiple taxes. So therefore, the GST, the government said that since I'm giving you input tax credit, you have to pass on by way of reduced prices to the consumer. This is clearly mentioned by the government. And slowly, that is say 10 years or 15 years down the line, the government will also start checking whether this person is passing on the input by way of price reductions. Can you elaborate on destination-based tax? So destination-based tax means in case of the interstate transactions, GST is a destination-based consumption tax. That means the tax will go to the state government where the consumption happens. So if in an example, if Telangana, Maharashtra is there, I am supplying a product to a dealer in Maharashtra. The moment I do that, the moment I supply a transaction to Maharashtra here, the state of Maharashtra gets the GST. Earlier, it was not that. It was the origin state concept. Whichever is the origin state, that state will get the revenue. But here, if the goods are consumed in Maharashtra, I will charge IGST from that particular person. And from this IGST will initially go to the central government. Government will check who is the destination state. To that extent, the share will be given to the destination state, which in our case, it was Maharashtra. Right? A single legislation CGST Act is there. Apart from the respective CGST Act, the states as well as the union territories have their own CGST or SGST Acts. Thus, there are multiple SGST legislations. As I told you, each state has its own SGST Act. We are not concerned with the state laws. We have to only look at central goods and service, but it is very much the same. Basic features of the law, definition of taxable event, taxable person, all that are uniform. This is necessary to preserve the essence of dual GST, because if there are a lot of changes between the central GST and state GST, the very purpose of introducing GST gets defeated. So ultimately, the uniformity between both is very, very important. I hope these points are clear. Yes, final consumption state gets the tax, right? Yeah. All these are covered. Classification of goods and services. What do you mean by classification? Can anyone tell me? What do you mean by the word classification? Any answer, whatever you feel. Why is classification very important in GST? What do you mean by the word classification? Why it is important for us? Good question, good answers, good inputs, very good. So therefore, why is classification important here? Being a goods and service tax, is it possible for you to levy the same type of tax, say on, let me take an example, on a toothpaste? Fine. There is a toothpaste, the tax rate on toothpaste and the tax rate on, say, luxury, like a sports car. Ferrari is there. Ferrari sports car you want to buy in India. So whether to keep the tax rate on a toothpaste and the tax rate on Ferrari the same. Fine. Can it be the same, first of all? Here, if you see, the tax rates are always higher in case of products which are of non-essential nature. So the moment a product is a non-essential product, which is, you can do without that. Can you do without a toothpaste? It's very difficult because you have to brush your teeth on a daily basis. But can you do without a Ferrari? Of course you can. If not a Ferrari, you can buy some small car and go from one place to the other. So therefore, classification is important because of the different types of products which are there. When I say goods and services tax, the different types of goods differ. Let us take the same example in services also. One type of service is providing tuitions, private tuitions. Is it a valuable service? Of course it is, because sometimes if in the schools and the colleges, you're not able to focus on the students, they go to the private classes and get. So therefore, it is a slightly valuable service as compared to others. Legal service. Definitely essential service. In case of any problem, you have to go to the lawyer. He will take the legal fees from you. This is one. Second, you go to luxury salon to do lot of cosmetic services on your face, hair, etc. Is it an essential service? Definitely it is not essential. You can just take care of yourself also. That is why the rate is different. That is why classification is different. That is why the term classification is important. So therefore, if you see here, classification is done based on the HSN system. What is HSN? You did not remember the full form. It is not relevant for you. In the exam, they will not ask you what is the full form of HSN. HSN is harmonized system of nomenclature. This is for people who are curious about the full form, because I, as a student, was very, very curious about full forms. Any letters are there means I will have to know what does it stand for. So harmonized system of nomenclature is a internationally accepted coding system. In that coding system, it is a list where all the goods are covered. Different types of goods are covered. So this HSN is used here. So therefore, when you're raising an invoice and you're mentioning the type of product, it is very, very important for you to mention the HSN code also. Whatever is the code which is given. How to know the code? You just Google, you will find HSN code of so and so. You just Google, it will immediately come. For SAC, service accounting code. Similarly to HSN, there is also service accounting codes which are assigned to all the services. So that has to be there. So each goods or service has the respective code which is assigned to that. Composition scheme for providing relief to small businesses, primarily manufacturers, supply of food articles, traders, etc. A simpler method of paying the tax is prescribed, known as composition levy. How many of you are aware of the term turnover tax? Turnover tax. How many of you are aware of the term turnover tax? Or when I say composition scheme, what immediately strikes your mind? I just want to know the basic understanding. When I say composition scheme, what exactly comes to your mind? What exactly comes to your mind when I say composition scheme? Some more answers, some inputs, anything. You can say anything. Or how many of you have heard of the term turnover tax? This is one question. If you have not heard of the turnover tax, my second question is, when I say the word composition, what comes to your mind? We used to write compositions in school in English classes. That is one composition. Apart from that, what comes to your mind when I say the word composition? Waiting for some answers here. Composition scheme is for small dealer. Okay, correct. Next. Any further questions? Mansha has given the one input here. Small businesses, I have already given in the slide. So this is not fair, Mansha. You have to tell some other thing. It is already given. It is for small businesses. Anything else? Anyone else? 1% of turnover tax, no ITC. Very good. Namrata has somewhat close to this thing. Sriram, where whatever is the sale amount, they just pay a simple rate of tax on the sales amount. They are not liable to tax ITC. Very good, Sriram. Very good. Vidit, lower tax rate, okay. Means compensate to anyone. Okay, you are somewhere near. Fixed rate on turnover, Janki, correct. Then Kamaljit, scheme for particular cases of traders manufacture. So all of you, and tax paid on account received by Burnima. So to some extent, all of you are right. To some extent, all of you are right. Persons who are very close, also we have already say that it's very simple. A composition scheme is has given as an option to your small dealers who don't want the hassle of GST compliance. GST compliance, every month I have to file GST returns. I have to call my CA or tax consultant. GST returns I have to file. Please file it immediately. Otherwise, I don't want all these things. For such people, composition scheme is there. So composition scheme is applicable to, for goods I'm saying, is applicable to manufacturers, traders, and also restaurant service providers and caterers. So suppliers of food articles, specifically restaurants, not even catering. So therefore, manufacturers, restaurants, and traders have the composition scheme applicability. Apart from that, even services are covered under the composition scheme since the last 2 years. We have a separate we have a chapter called Charge of GST, which is chapter number 3, which I'll only going to be which I shall only be taking. So in there we will discuss your composition scheme. Fine. So in simple terms, most of you have got the gist, right? It is primarily to save the burden of compliance of GST provisions. This option is given for certain specific businesses, right? What is the turnover limit? What is the prior rate, etc. We'll discuss when we do that particular chapter. Registration. Registration, why it is important? Because each particular supplier needs the ID, needs the particular identity. That is why registration is important. So therefore, if aggregate turnover, again, this is a concept in GST, aggregate turnover in registration chapter, we will see aggregate turnover exceeds the threshold limit. What is the threshold limit? Simple understanding. As of in INR 20 lakhs, in most of the cases, aggregate turnover in one financial year, if it exceeds 20 lakhs, you are required to obtain GST registration. You are required to obtain a GST registration. Once you have a GST registration, you can pay the tax, file the returns, etc. So therefore, 20 lakhs is most common. But sometimes what happens, what has happened in the recent past, for particular states, the registration limit was lowered. That is Manipur, Mizoram, Nagaland, Tripura. For these 4 particular states, threshold limit is 10 lakhs. For these states, northeastern states, Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Pondicherry, Telangana also. Telangana government also has said 20 lakhs. Apart from 20 lakhs for supplier of goods, it is 20 lakhs. Whereas in other states, 20 lakhs for supplier of services, but for goods, it is 40 lakhs. This is just as an introduction class. Don't read much into this. This will be covered in greater detail in a registration chapter. As of now, just understand that for the purpose of registration, there is a threshold limit, monetary limit of your turnover, aggregate annual turnover. This particular has certain limits which is prescribed. You just remember that at the moment. That's all. Yes, composition scheme means local intrastate sales. Many of you have got the time. We'll read composition dealer in much more elaborate manner in the charge of GST. Father is composition scheme dealer. I am his accountant. Wonderful, wonderful. This is called learning through business. That is what the CA exam teaches you. That you have a business and you do the accounts and GST, you learn the subject. The practical understanding of subject is important. That is what is the beauty of the course. Fine. So apart from this relief to small scale businesses, also exemptions. What do you mean by the term exemption? It means that you don't have to pay any tax. So apart from giving relief to certain small scale dealers by way of composition scheme, the law also contains exhaustive provisions of exemptions. That is, in certain goods and services, there is no tax which is applicable. So after charge of GST, the next topic will be exemptions. That also will have the same. So all these exemptions are important for us. Certain important exemptions are required for the purpose of understanding. Then the most important point now is how do you utilize the credit in GST? So if you see in GST, order of utilization is very, very important. As I told you, 3 types of taxes are there. The CGST, SGST and IGST are there. So when you are purchasing something, you pay CGST and SGST if you are purchasing from within the state. If you are purchasing from outside the state, you pay IGST on that. And you collect the IGST in case you are supplying outside the state. You will collect the CGST and SGST in case you are collecting within the state. So therefore, in this particular situation, how do we utilize the credit in the payments? That is also prescribed. First important point, please make a note of it. IGST credit only should be first utilized. So therefore, if you are purchasing from outside the state and you purchase from local states also, if you want to adjust the credit, first look at the IGST credit. First IGST credit has to be taken. This IGST credit has to be utilized towards the IGST payment. Fine. So what is the IGST credit? This entire IGST credit has to be utilized towards the IGST payment. Once this is utilized towards the IGST payment, whatever is left out, right, that can be used towards payment of CGST and SGST or UTGST in any order, in any proportion. So IGST credit is there of 1,000 rupees. You are procuring from outside the state. IGST you have paid of 1,000 rupees. You have sold outside the state. You have sold within the state also. Whatever IGST credit 1,000 is there. Assuming you are collected 500 rupees IGST from one customer, 300 rupees CGST, 300 rupees SGST from other customers. So on this IGST 1,000, first you have to use towards the payment of that 500 IGST. We'll see one example, you'll get more clarity. After that is done, whatever IGST credit is left out, you will utilize for the payment of CGST and SGST in any order in any proportion. It is your wish. After this IGST input tax credit is totally utilized, then you have to look at the CGST ITC. The CGST ITC can be used only for the payment of CGST and IGST in that order. So ITC of CGST is there. First use towards CGST. After that, anything remaining you use towards the IGST. Same way, ITC of SGST, first use for SGST. Anything left out, use it for IGST. Main important point, CGST input cannot be used for payment of SGST. Similarly, SGST input cannot be used for the payment of CGST. It should be used only for the payment of IGST. Fine. ITC of SGST should be utilized for IGST after you complete the utilization towards the CGST or SGST. This is the order of utilization of credit. If you see one example, you'll get better. Let us look at some examples here. Post that you ask your queries, because based on the this particular slide, you will have numerous queries here. So therefore, first let's look at these examples. Once you look at these examples, you will get more clarity with regard to the same. Here, stage 1, supply of goods or services by A to B. Now, A and B are located in the same state. Value what is charged by A for the goods or services is 10,000. GST rate is 18%. CGST at the rate of 9% is 900. SGST at the rate of 9% is another 900. Total comes to 11,800. CGST and SGST which is being charged. Here what will happen? A collects from B. So A will remit it to the central government and the state government respectively. So A will collect this 900 each, pay to the central government. Very simple. This is stage number 1. Stage number 2, what happens? B to C, again within the same state. Here what is happening? B is selling to C. B is charging 12,000 rupees. CGST 9%, 1,080, SGST 9%, 1,080. Total comes to 14,160. 14,160 is collected. So here what happens? 1,080 CGST is payable. CGST payable credit you use only for the CGST. 900 is the CGST credit. 180 is the net CGST payable. Similarly, SGST payable is 1,080. You reduce the credit of SGST of 900. Net SGST payable is 180. Right? Fine. So it is very, very clear that what are the CGST and SGST payable in case of this particular stage, that is stage 2. So therefore here in each stage the revenue is earned. In this case, since both the procurement and the sale are happening in the same state, the CGST and SGST are very much the same. I hope it is clear. Now we look at the order of utilization of credit in case of different states. So stage 1, what is happening? Single state is involved. X sells to A within the state only. Value which is charged is 10,000. GST which is CGST is 9% and SGST is another 9%. So 10,000 into 9% each is 11,800 at stage 1. So this CGST and SGST will be remitted by A to the appropriate government respectively. That is stage number 1. Stage number 2, what is happening? A of state 1 sells to B of state 2 at 12,000. So value what is charging is 12,000, but here SGST will come. Why? Because it is sold to different state. Sorry, IGST will come because it is sold to a different state. IGST at 18% is 18% of 12,000, 2160. It is 14,160. So how the utilization has to be available? Done. IGST payable is 2,160. Again, IGST payable, you will reduce the credit of CGST 900, credit of 900 SGST. Net IGST payable is 360. Now, This IGST payable, you however you can use. There is no restriction here. There is no input tax credit of IGST. So straight away you use towards CGST and SGST. Net IGST payable is 360. Now what happens here is whatever IGST is charged on B of state 2 will be remitted by A of state 1 to the appropriate government of the central. So therefore what happens here? Here if you see, if you go to this particular slide, A of state 1 starts supplies to B of state 2. This IGST 18% what gets charged, this initially goes to the central government. Please listen to this very, very carefully. This IGST of 18% initially goes to the central government. Then what happened? If the credit, whatever is used, this 2,160 goes to the central government. But here in this particular stage, when making the net payment, you use credit of CGST and credit of SGST. Now here what is happening? Since SGST credit is being used against payment of IGST, whatever credit was utilized, the state 1 will transfer to the central government. This happens in a backdoor process. We don't have to do all of this. Here what the dealer will do, 2,160 is the IGST what I collected. Against that IGST, I utilize 900 rupees CGST. After that, I use SGST 900 rupees. Net IGST payable is 360 rupees. So here what happens, whatever the IGST is charged, first it goes to the central government. But since 900 credit was used, when IGST was being paid to the central government, 900 credit was used. So therefore, this 900 credit, it technically doesn't go to the central government. 2,160, you are adjusting CGST. That doesn't matter because CGST also goes to the central government. IGST also goes to the central government. After you adjust this 900 rupees, you are adjusting this 900. So this person here is paying only 360. This person here is only paying 360 to the central government. But SGST credit is using. So technically this amount has to go to the central government. That is why this particular state will transfer this SGST 900 rupees to the central government. Thereby, the central government will get the total IGST which has been used. This is the concept. I hope you got this point clear. Then, stage number 3. B of state 2 supplies to C of state 2. Again, here what is happening? Local sale. So, after the IGST, B is selling to C, which is located in the same state. So value which B is charging is 14,400, CGST 9%, SGST 9%, 16,990. So what is the output CGST? It is here 1296. 1296 is being charged. What is the IGST credit available? 2160. 2160 is the IGST credit which is available. Out of this IGST credit, so first what is happening? He has to pay CGST payable. So what does the rule say? First, you have to finish the IGST credit. So out of the 2,160, since the CGST payable was 1296, out of 2,160, 1296 is used for settling the CGST payable. So the CGST payable will become nil. After the CGST payable is being settled off, then you come to the SGST payable. SGST payable is 1296. What is IGST which is remaining? 2,160. This is nothing but 2,160 minus 1296, right? This is how this 8,864 came. So IGST credit 864 you will adjust here, and SGST payable to the state government will be 432. So once this is done, here the state government is not getting the revenue. Why? Because credit of IGST is being used. Since credit of IGST is being used, central government will transfer the IGST utilized to state number 2. This is the mechanism. In case the IGST credit is used for the payment of the state taxes, the central government, whatever credit is being used, will transfer it to the state government so that there is no revenue loss. There is no revenue loss. So this is how you do the utilization of credit in each stage. So once we work out more and more problems, once we cover all the topics, the major problems, you'll understand more clearly what this concept is. This may appear a bit confusing initially, but trust me, it is not at all confusing. It is very, very crystal clear. So totally, if you see what is the revenue earned by the central or the state government, total revenue to the central government initially 900 came, second stage 360 came, then 900 came, and whatever center you have transferred 864, 1296 earned by the central government. State government here doesn't earn anything because initially you collected, but later since it was an IGST sale, you'll get that gets transferred by state one to the center because the credit was used, so it becomes nil. So state government 2 will get initially 432. Then since the IGST credit was used, the 864 will get transferred and 1296 will come. So I hope you got this point of how it is being utilized by the credit. If IGST credit, some doubts. IGST credit is here in 1 quarter, but no IGST payment is here. But if IGST credit is here in 1 quarter, okay. No IGST payment is here, okay. But CGST and SGST credit is here, okay. IGST credit can be used or not. 100% it can be used. There is no problem. IGST credit can definitely be used. So as per updated rule, whatever be the head of ITC, whether IGST or CGST or SGST, they'll be first used to set off the IGST output tax liability first, 100%. First, the IGST credit has to be extinguished. So when I say IGST credit is extinguished, it will first automatically be adjusted towards the IGST only. It means credit may be in any head, but it will be it will be used to adjust the IGST output liability. After that only they can be set off against the respective heads. So this was there before. Later there were multiple changes with what occurred. Now it is very, very clear. When there is IGST credit, first you use towards the IGST. Let me go back to that slide so that you get more clarity here. Order of utilization, if you see here, IGST credit first utilized towards the IGST payment, then towards CGST, SGST in any payment. After that, what you will do here in this particular situation, ITC credit of CGST to be used for CGST and then the IGST. Okay, IGST credit has to be extinguished, but it's not like IGST liability, it should be first get transferred. Earlier the rule was like that. Later it got changed to this one. Don't get confused. Now the rule is very, very clear. The rule is here the ITC of SGST for ITC of CGST in this particular situation to be used for the CGST and after that the IGST. Then another important point is after in case of IGST payment, you have to first, this is what is important. IGST of CGST cannot be, ITC of CGST cannot be utilized for payment of SGST and vice versa. So first you should use the ITC of CGST. Okay. After that, only you can use the ITC of SGST for making the payment of IGST. I hope this point is clear. This third point also is very, very important. Okay. Whatever ITC of CGST is there, first extinguish towards IGST. After that only you will get the SGST. This was the updated rule which came here. I hope you got the clarification. Fine. Yeah. Now more means no IGST payment here. CGST and payment. Then the credit can means no IGST payment first here, but CGST and SGST payment is here. Then can credit be used for CGST or needs to first wait for IGST payment? Very simple. Here, your query was slightly confusing, Gurdeep, and I'll just read your doubt now, and then we'll look at it. Means no IGST payment first, but CGST and SGST payment is here. Can credit be used for CGST and SGST, or need to be first wait for IGST payment? IGST credit, if it is there, very simple. Again, I'm telling you the rule for conclusion here. The moment you file your 3B, GSTR 3B, you have some credits with you. In that, first look at the IGST credit. This is the thumb rule. First look at the IGST credit. Utilize that IGST credit against the IGST liability. After that, if some more IGST credit is there, you can utilize towards the CGST and SGST however you want. I hope you got this point. Okay, I'm repeating one more time. If IGST credit is there, first use towards the payment of IGST. Okay, after you use towards payment of IGST, use towards CGST and SGST. Okay, let us take an example. Let us look at a situation where there is no IGST payment. You have IGST credit, you have CGST and SGST. Straight away use it, no problem. I hope you got the point. This is first. This is the IGST credit point. Then the second one, if in case there is a CGST credit, first used towards the CGST output, then you use towards the IGST. SGST credit, first used towards the SGST output, then you use towards the IGST output. This is the way of the CGST and SGST, right? So I hope this point is clear. Fine. Then, if SGST credit is using, then the central government will compensate to the state. Yes, 100% will compensate. If SGST credit is being used for the payment of IGST, the central government will transfer to that amount, transfer to that extent a compensation to the state. There is no problem here whatsoever. Fine. I hope you got the point. You'll understand it better once we do more problems. Once you look at the ITC chapter as well as this thing, major problems will be covered. There, further clarity will be got with regard to this one. As of now, we just looked at the order of utilization. I hope you got clarity. Fine. Any further queries? Did I miss any query? Please please let me know. Gurdeep, you got it? Good. Yeah. Any further queries? Let me wait because many doubts were there. If someone is not asked anything, I'll just wait. Yeah. Yes, Namrata, you're right. IGST first for IGST, then CGST and SGST in any manner. You're right. Done. So let's move forward. So GST framework, further concepts with regard to GST. First is your common GST electronic portal, gst.gov.in, website managed by the Goods and Services Network, a provision which is incorporated under the provisions of Section 8, is set up by the board. So it's a not-for-profit company which is set up by the government. That is your Goods and Services Network, which manages this portal, right? What is the functions of this GST network or the common portal? Facilitating your registration, forwarding the returns to the central and state authorities, computation settlement of IGST, matching of the tax payment, various MIS reports, analysis of the taxpayer's profile, right? But if you see here, the e-way bill portal, what is an e-way bill? If you're transporting one product from one place to the other, e-way bill has to be generated, electronic way bill. This concept will be covered in your accounts and records chapter. It's an electronic document generated on the GST portal. Invoice registration portal is the website again for uploading or reporting of e-invoices. Fine. Here you have to register and also upload and report the e-invoices. Then GST Suvidha providers, application Suvidha providers are information technology companies for interacting with the Goods and Services Network, helping the persons in doing all the GST related activities. GST compensation cess has also been imposed on specified luxury items or demerit goods like pan masala, tobacco, etc. So in case of demerit or sin goods like tobacco, aerated waters, and also motor cars, etc., compensation cess also is there. See, if you see here, the motor cars earlier, a high rate of VAT was there. So this entire VAT, it used to go to the state government. But now what has happened, since a part of the huge revenue is also going to the central government, the central government has decided that they will compensate the states for a period of 5 years. That 5 years is over now. 2017, it was first implemented for 5 years, but later it got extended because at COVID, this compensation was stopped for a particular period. Then it got extended. So this compensation cess needs to be paid by the central government to the state government in order to compensate the reduction in revenues on the luxury or the sin goods. Again, GST is levied on all goods and services except alcoholic liquor for human consumption and petroleum, diesel, petrol, ATF, and natural gas. Apart from all these products, GST is leviable on all goods and services except alcoholic liquor for human consumption and petroleum products. Fine. Petroleum, diesel, petrol, air, ATF means air turbine fuel, and natural gas. All these, the GST is not applicable. Alcoholic liquor for human consumption, as I told you, this continues to be subject to state excise duty. Petroleum also to that extent is state excise duty. Tobacco, both GST and central excise are covered here. And opium, Indian hemp, narcotic drugs, again, both GST and state excise duties are covered here. Sale of immovable property, if you see, is a very, very interesting topic which is covered under GST. If it is just sale of land or sale of a ready-made house, then no GST is applicable. But construction contracts, development agreements are subject to GST. We shall look at all those things. So if you see, central taxes, all these are subsumed or merged in GST. We discussed all of this. State taxes, all these particular taxes are now merged in GST. Any queries here? Please feel free to ask. So benefits of GST, again, theoretical question. Unified national market is created because of GST. The taxation country has become a bit small because of GST here. It's become a single national market. All of the registrations are centralized. A boost is given to the Make in India initiative because of the input tax credits available. Cascading effect is reduced. Many people will want to manufacture in India. A boost to investments, exports, and employment. Okay, because of this, exports also incentives are given. Zero-rated supply of tax benefits are given. Refunds are given to exporters of goods or services. Employment also will increase because of this. Simplified tax structure by way of ease of doing the business and certainty in the tax administration. Fine. So please go through all of this in the study material. Very, very simple points. Automated procedures, reduction in compliance cost. One single tax is there. So definitely compliance also will be there. A lot of advantages given to the trade and industry. And benefits are given to the industry. Mitigation of ill levels of cascading. Benefits to small traders and entrepreneurs. Fine. So here, let's take a small break till now. Once we come back from the break, we'll cover the constitutional amendments of GST, and also we will look at, if the time permits, that is chapter number 2, that is your concept of supply. See you after 10 minutes. Welcome back, everyone. Let me see if I could see a few queries before we took a break. Ill effect means bad effects of cascading of taxes. Vivek Srivastav, I think you have typed something wrong by mistake, so kindly look at it. If there's any query, please let me know. Yeah. So now we come back to our discussion here. We look at the constitutional provisions pertaining to the GST. We have to see where all were the amendments which took place in the constitution with regard to the GST law. So we'll only go through the respective articles which were amended and some new articles which were introduced in the constitution because of the imposition of GST. So therefore, the power to levy the GST, as I told you, had to be integrated in the constitution because the GST law diversified the powers between both the center and the state law to levy the taxes. Earlier, it was very, very clear that certain taxes had to be levied by the center and certain taxes had to be levied by the state. But in case of GST, the GST was levied both by, gives the power both to the central and the state government. So therefore, the provisions had to be amended. So therefore, if you see here, Article 265, authority of law, it prohibits arbitrary collection of tax. It states that no tax shall be levied or collected except by authority of law. So therefore, in case you want to collect any taxes, you need to have the authority of law to collect those particular taxes. Then relation between the states and the union government, the power for enacting the laws is conferred on the parliament and on the legislature of a state by Article 245 of the Constitution. Fine. So both the union government and the state government are given the powers by Article 245. And Article 246 gives the authority to the union and state government to levy the tax. Also, the three different lists are given in 7th schedule to Article 246. The union list, the state list, and the concurrent list. Union list, exclusive taxation powers are there with the central government. State list, exclusive taxation powers are there with the state. And concurrent list is both the state and the center can levy the tax with regard to the same. So 246A of the Constitution has granted the power to levy the GST. It was conferred by this particular article, which was introduced by the Constitution 101st Amendment Act 2016. So what is the need for the constitutional amendment? First one, delineated the powers to levy tax for the central and state government. So the powers to levy the tax were separated by the central and the state government. That therefore a constitutional amendment was required, wherein the powers of charging the GST were given both to the central and the state government. The second thing, the states are not empowered to levy the taxes on the importation or exportation. With regard to imports, the total tax was levied under the Customs Act. But here, the IGST on imports also is prescribed in the GST law, and the state were not empowered to levy the taxes on the importation or exportation. These states in this particular case also have the power. Of course, it will first be collected by the central government and then it shall be compensated by way of the credits and matching, etc. to the state government. The third point, center exclusively had the power to tax the manufacturer. So with respect to manufacture of a product, the total right to levy the excise duty was with the center and not to the state. And also for sale of goods, the states only had the power to tax the sale of goods. But in the GST, the CGST also is levied on the sale of goods. So therefore, the central government also needed to have the power to tax the sale of goods under GST. And in interstate sales, CST was applicable. That is your central sales tax. But now, as per the GST, the IGST is applicable. Fine. So these are the various points due to which a constitutional amendment was required for the purpose of the GST. In case of services, the central government had the power to levy the service tax. The state government did not have the power to levy the service tax. That is why a constitutional amendment was required, where the power to collect the service tax was also given to the respective states as well. Therefore, finally, Constitution's 101st Amendment Act was passed. It has 20 sections. The newly inserted Article 279A, it empowers the Constitution to constitute the GST Council. Remaining provisions notified with effect from 16th September 2016. So therefore, 279A is the article which is inserted for the purpose of constitution of GST Council. For that, 279A article is imposed. Also, compensation to states for loss of revenue. We just saw that before the break itself. Due to the introduction of goods and services tax, the states are going to forego loss of revenue, due to which compensation provision mechanism was introduced. Based on the recommendations of the GST Council, compensation to the states will be given for the loss of revenue arising on implementation for a period of 5 years. Concurrent powers are given to the Parliament and the state legislatures to make the laws governing the tax on the goods and service tax, goods and services, levy of IGST on interstate transaction of goods to be levied and collected by the central government and apportioned between the union state and the states in the manner provided. Fine. And also it gave the principles for determining the pace of supply, and where the supply takes place in the course of interstate trade or commerce, again shall be formulated by the Parliament. So therefore, in case of interstate transactions, the central government only clearly had the right to make law, which is given in the constitutional amendment also. So what does the constitutional amendment say? It says that it provides for a levy of GST on supply of all the goods or services except for alcoholic liquor for human consumption. Alcohol is not clearly given. Only the word alcohol is not mentioned. It says alcohol for human consumption. So only the alcohol which can be consumed by a human is covered here. So it provides for a levy of GST on supply of all goods or services except for alcohol for human consumption. So therefore, if you observe here, the product of alcohol for human consumption is excluded in the Constitution itself. That means even in the future, you will not get GST on alcohol. There is a misconception here. In one of the movies also, what they showed was that on medicines, the government is levying the GST, on alcohol, it is not levying the GST, or something of those lines. But it is a very, very silly dialogue. It was formulated without any understanding, if you ask. Because on alcohol for human consumption, the state taxes, lot of taxes are covered, due to which already the entire revenue goes to the state government. There is no GST on alcohol for human consumption because it is excluded from the Constitution, not because the government doesn't want to tax alcohol. So please understand very, very clearly, excluded from the provisions of the Constitution itself. With regard to the 5 petroleum products which we covered, that is your air turbine fuel, petroleum, crude, diesel, motor spirit, and all those things, and natural gas. So in these particular products, as of now, they are excluded from GST, but it has clearly said that from a later date to be notified, it shall be subject to GST also. There is an ongoing argument between the states and the center. Though the center wants to tax these particular products, the states are not in favor of this. So that is why till now this has not yet been applicable. And as I told you, Article 279A, joint forum of the center and states, namely GST Council, is created under this particular article. So what is this GST Council? It has been notified with effect from 12th September 2016. It shall be constituted comprising the Union Finance Minister, Minister of State Revenue and State Finance Ministers. What all things shall be recommended by the GST Council? The GST rate, exemption, thresholds, taxes to be subsumed and other features. A degree of harmonization on different aspects of GST between the center and states is covered here. Any further queries here? Yeah, please feel free to post your queries in case of anything. So this was your GST Council 279A. Article 246A gives the power to make the laws with regard to GST. So notwithstanding anything contained in 246 articles and 254, subject to clause 2, the legislature of every state has the power to make laws with respect to goods and service tax. Parliament has the exclusive powers to make the laws with regard to the goods or services of tax, where the supply of goods or services or both takes place in the course of interstate trade or commerce. Very, very simple. In case of interstate transaction, the total power to levy the tax is given to the parliament. Okay, in case of supply in the course of interstate trade or commerce is totally given to the parliament. It's very, very simple, and I hope you got this point as well. Fine. The provisions of this article shall, in respect of the goods and service tax, shall take effect from the date recommended by the GST Council. By the GST Council, whatever date is being recommended, from that particular time, this will be applicable. Fine. Then we go to 248 article, residuary powers of the legislature, which is amended. Now, in case of any matter which is not covered in the concurrent list or the state list, these three lists of parliament were there before. Residuary powers were given to make the changes, which is not given in the concurrent list and the state list. But now a line has been added to this article subject to 246A, namely the power to make the laws with respect to goods and service tax. So this article 248A with respect to residuary matters is given as a subjection to article 246A. 249 and 250 articles are power to make the laws in a national interest. With respect to national interest or in case of emergency, it again extends to GST. So therefore, in case of a national emergency, that particular situation, any matter in the state list also, the parliament get listed, that in that GST also is covered. Fine. Then article 268, duties levied by the center but collected and appropriated by the states. In case of stamp duties and duties of excise on medicinal and toilet preparations, which is given in the union list, shall be levied by the government of India, but collected by the state in the case where such duties are leviable. So these are all some residuary articles which are also amended. Here, duties of excise on medical and toilet preparations are omitted in 268. Because in this particular situation, there is no question of excise duty where the center collects now, because it is merged into the GST now. Article 268A was the article which empowered the union government to levy the service tax. It is totally removed. Fine. So it is totally removed from the constitution now. And article 269A, which says that GST on interstate supply shall be levied and collected by the government of India, and such tax will be apportioned between the union and the state. Import of goods also is to be treated as an interstate supply. Import of goods, whatever goods you are importing, those also shall be treated as an interstate supply. Important points which are covered by article 269A, where amount is collected as IGST has been used for the SGST payment or vice versa, such amount shall not form part of the consolidated fund of India or state respectively. What does this mean? It says that if you are collecting an IGST and you are using that for the purpose of payment of SGST, it will not form part of consolidated fund of India. Because why it won't form? It is utilized for the payment of SGST and later will be compensated, because it is to facilitate the transfer of funds between the center and the state. Consolidated fund of India means the fund which it is used for specific purposes, but that is no longer relevant because the transfer keeps happening. Parliament is empowered to formulate the principles regarding the place of supply or both in case of interstate trade or commerce. 270 talks about distribution of GST, how it will be done within the states. 271, an amendment is done, wherein what was 271 before, what does it says? It says that 271 gives the power to the parliament to increase the duties or taxes in case of articles 269 or 70. But now this article does not include GST. It excludes GST because the power to increase the duties taxes is given under 279A to the GST Council only. Only the GST Council can take such decisions. And then Article 366(12)A, goods and service tax means tax on goods, supply of goods or services or both, except taxes on the supply of alcoholic liquor for human consumption. Therefore, in 366(12)A, as some of the students rightly pointed out before the break, it clearly is excluding the taxes on the supply of alcoholic liquor for human consumption. So therefore, these three lines are very, very important. It is important to note that alcoholic liquor for human consumption has been specifically excluded from the definition itself. It can therefore be implied that there is no scope of GST being levied from a later date as well. So the GST cannot come in later also in these particular situations. Fine. Definition of services, very simple definition in 366(26)(a). Services means anything other than goods is covered under services. Goods are already defined under Article 366(12), which states that goods include all materials, commodities, and articles. Fine. Again, Article 366(26)(b) state also includes the union territory with legislature. Article 286 talks about imposing restrictions as to imposition of tax on the sale or purchase of goods amended. So here what happens? The state had the power to tax the sale or purchase of goods. Now that has been amended. This article restrains the state from framing the laws. Has been amended to incorporate the changes arising by substituting the word sale or purchase with supply of goods. Therefore, the states don't have any right to impose the GST on interstate supply of goods or services. It is levied only by the union government under Article 269A as mentioned. Fine, that was your Article 286. 279A, as I told you, is very, very important. Constitution of GST Council. The President will shall within 60 days from the date of commencement of the Constitution by the Constitution CA Act 2016 constitute a council to be called as the GST Council. Who all shall be there? The important theory question you can expect in the examination. Chairperson will be our Honorable Union Finance Minister, Union Minister of State in charge of Revenue or Finance, Minister in charge of Finance, or any other minister for that matter shall be the members of the GST Council. Okay, the members of the council shall choose one amongst themselves to be the vice chairperson of the council for such period. Chairperson is obviously our Honorable Finance Minister. GST Council shall make recommendations on what all the taxes, cesses, and surcharges levied by the union, state, etc., goods and services that may be subject to or exempted from the goods and service tax. The GST Council shall make the recommendations to the union and the states on model GST laws, the threshold limit of the turnover below which the goods and services may be exempted, rates including the floor rates with the bands on goods and service tax. So these are some of the key responsibilities of the GST Council. On special rate or taxes to raise the additional resources during the COVID time, lot of the relaxations were given with regard to the GST rates. Special provisions were to be undertaken with regard to the northeastern states like Arunachal Pradesh, Assam, Jammu and Kashmir, and all these states, and any other matter as the council may decide. And also recommending the date of taxing the petrol, diesel, etc. The GST Council shall recommend the date from which the GST taxes will be levied on the petroleum, crude, high-speed diesel, motor spirit, natural gas, aviation, turbine fuel. Guiding principles, again, the need for harmonized structure and development of harmonized national market shall be the guiding principles when discharging the functions conferred under Art 279A. What is the quorum here? Quorum is 1/2 of the total members shall be constituted as the quorum for its meetings. Procedure for performing the functions. The GST shall also determine the procedure. Fine. These are some technical points. Please go through it. Not very relevant from examination point of view. Just there in your study material. Please go through it. How the decision shall be taken. Majority of not less than 3/4 of the weighted votes shall be taken. How do you calculate the weighted votes? Vote of the central government will have 1/3 of the total votes cast. Votes of the state governments shall have 1/3, 2/3 of the total votes cast in that meeting. Okay. No acts or proceedings in the GST Council shall be invalid merely by reason of vacancy, defect, procedural irregularity. Okay, we cannot say that the acts or proceedings are invalid because of these minor things. Dispute resolution mechanism also shall be constituted in case there is a dispute between, because all the states along with the center have to be in perfect synchrony with regard to the goods and service tax law. So therefore, whenever there is a dispute, the GST Council shall establish a mechanism to adjudicate any dispute between the government and the states, government and any of the states, or between two states also. So 368 article also has been amended to include 279 within its purview. Therefore, two-thirds majority in each house of parliament and as well as ratification by at least half of the states is required to make any amendment in Article 279A. So therefore, if you want to make any amendment in Article 279A, if you want to change the powers of the GST Council, you have to do it by way of two-third majority in both the House of Parliament and by ratification of at least half of the number of states is required. 279 is a very, very important provision. You cannot easily try to change the things. You have to change it through the Constitution itself. Fine. So that was the end of chapter 1, which speaks about the GST in India. So you can just go through these. Mostly theory questions are only covered here. Those illustrations are only for you for the purpose of understanding the order of inflation of credit, etc. Fine. Just go through these questions. All these topics were discussed. And in this fifth question is very tricky. Resolve the double taxation dichotomy. You have to look at the need of GST chapter, and according need of GST related points what we discussed, talk about how avoiding the cascading effect in this particular things. Discuss the leviability of GST or otherwise for these 4 items. Alcoholic liquor for human consumption is totally excluded. Petroleum crude again presently not leviable but can be levied from the later date. Tobacco, both GST and as well as both the GST and the regular state excise duties are applicable. Opium, Indian hemp, and other narcotic drugs also, both the state and the GST are applicable. So this was your topic. Any queries till now before we go to the second? Sir, can I see ask the questions like explain Article 279A? No, such straightforward questions cannot be expected in the CA final level. They will ask in a very discreet manner, in a very indirect manner. Fine. They will say that Article 279 has the powers to do this. Please explain. Fine. You will have such topics which are there. It will not be like a basic question, explain what this has to be done or that has to be. It's not so simple. Fine. So that was your first topic. So just give me one moment. I will just open the slide of the chapter 2 and I will come back in 1 minute. Yeah, now we come to chapter number 2. Also for all the students, just want to announce that half an hour from now, that is at 8:30, you will have a small talk by the ICI Board of Studies person in New Delhi, Shefali ma'am, will be talking about how the students can leverage from this wonderful initiative of life coaching classes. So please feel free, please note that you have to attend that for the proper way in which you can get the positive feedback and the way you can positively use these mechanism of the life coaching classes in your preparation for your examination. So please stay tuned for that. Meanwhile, now we come to the second chapter of GST, which talks about the concept of supply. As I told you, a taxable event is very, very important. Whenever you are analyzing the leviability of the taxes, right? It is very, very important because you need to know when the respective taxable what occurs and what exactly is the taxable event. You should know all of these to know when the GST is required to be charged. So therefore, here we are going to analyze the taxable event, which is supply. We are going to see what exactly is supply and on what exactly the tax is levied. We are also going to examine the terms consideration, because when you supply the goods or service, you will get a consideration. You will get consideration means something in return. On that, the GST is chargeable. So therefore, this also is very, very important point. So next one, if you see here, incidence of tax is a foundation stone for each step. Okay. When the tax will be triggered, when the tax will be levied, is an important point for us to understand, so that you know the respective appropriate tax is discharged to the government. So incidence of tax, therefore, is very, very important. It is a foundation stone for each state. The previous indirect tax laws were prone to variety of interpretations because service tax was there, excise was there, central sales tax was there, variety of interpretations were there. But now this is very, very simple. When I say incidence of tax, it only refers to the tax on the taxable event, which is nothing but supply here. In previous indirect tax laws, lot of controversies were there, whether a particular process amounted to manufacture or not. Why this was important? Because excise duty was levied on the manufacture of products. When I say excise duty was levied on the manufacture of products, the next question is whether this process comes under manufacture or not. On that, you had close to 100 case laws, 100 to 150 case laws only on the concept of manufacture. Now, no longer that controversies are no longer there. It is only supply, that's all. There is no question of manufacture, sale, provision of service. It is only purely supply. Fine. Whether it is a sale of goods or provision of service, whether the sale was a predetermined sale or a sale which happened afterwards. So therefore, GST laws resolve all such issues by giving one comprehensive taxable event, which is known as supply. That is supply of goods or services or both. So before we go to the main section, that is section 7, we will look at certain definitions here. Post these definitions, we'll go to section 7 and then analyze what all are the various concepts covered in the supply definition. Section 2, subsection 52 defines the term goods. Goods means what? Every kind of movable property other than money and securities. Again, one more important point. When I say section here, it refers to the section of the CGST Act 2017. Some concepts are also covered in the IGST Act 2017. So wherever the IGST Act comes, I will separately clearly indicate. If no such indication is given by me, that means it refers to the section of the CGST Act 2017. So therefore, 2 subsection 52 says goods means every kind of movable property other than money and securities. So it is very, very clear that money and securities are not goods. So when I say money, the money lying in the bank account or such aspects, it does not come under goods. Every kind of movable property other than money and securities, but includes actionable claim, growing crops, grass and things attached to or forming part of the land, which are agreed to be severed before the supply or under a contract of supply. So therefore, what does it mean here? The goods means every kind of movable property other than money and securities. So money and securities are not covered here under goods. Okay, that is very clear. When I say securities, it's nothing but your share market, shares, derivatives, options, futures. These are all not covered under goods. Earlier, the model GST law, which came out in April 2017, also proposed securities to be covered under goods, but lot of rebellion started from the exchanges and the business community. No one wanted this to be covered under goods because it is more of a speculative activity. So therefore, securities and money also, that means if you have the fixed deposit in a bank, you are getting interest. So on that, there is no GST. Why? Because money is not at all a good here. And fine. So there is no supply at the first place and there is not at all a good. But includes actionable claim. What is actionable claim? Actionable claim is if you have a claim to a particular event. If you are playing a state-sponsored lottery, you are winning some amount or you are winning some product. Okay. In that particular situation, you have a claim to that respective product or money whatsoever. So that comes under goods. And also growing crops, grass and things attached to or forming part of the land, which are agreed to be severed. Severed means cut here. Severed, if you are cutting any grass, crops, etc. from the land, okay, before the supply or under a contract of supply, if you're cutting those products, all those comes under goods. Fine. Actionable claims is included in the definition of goods, but actionable claim other than lottery, betting, and gambling will not be treated as supply of goods or services by virtue of Schedule 3. Schedule 3 talks about the transactions which are neither a supply of goods nor a supply of services. When I read the section 7 of concept of supply, I read along with section 7 three schedules. Schedule 1, 2, and 3 is read along with it, which schedule 1, schedule 2, schedule 3, all these three schedules are very, very important for us. We'll be spending considerable amount of time in trying to understand these particular schedules. So therefore, actionable claims other than this lottery and betting are not a supply of goods nor services by virtue of schedule 3. So therefore, on that GST is not applicable, even though it is a goods as per the definition. Then certain intangible goods, intangibles like license, DPB license, copyright, and carbon credit, these all will be covered under goods only. Fine. So therefore, intangibles also will be covered under goods in these particular situations. Then competent authority is defined under 2 subsection 29. It says that any authority as may be notified by the government is a competent authority, like your commissioner of GST, GST Council, etc. Whichever is notified by the government, they are the competent authority. Family means what? Again, why is the word family important in GST? In GST, the first time ever since the service tax and VAT laws were there, the concept of a related person was brought into existence. The concept of relative and related person are already there in the Companies Act and the Income Tax Act. When you are selling any products to a related person, when you are providing any service to a related person, there is always a probability of the transaction being done at less than market value. The GST law wanted to act on certain things, such things, and therefore it decided that why don't we cover these transactions as well? So therefore, the family here, why it is important definition? Because under related person in GST law, family also is covered. So in family, if spouse and children are there, parents, grandparents, brothers, sisters of the person are also there. If they are wholly or mainly dependent on the said person, it will be coming under family. So family means what? Spouse and children of that person. Number 1, spouse and children of the person. And number 2, the parents, grandparents, brothers, sisters of the person, if they are wholly or mainly dependent on the said person. That means spouse and children are covered even if they are not dependent. Very, very clear. Spouse and children are also covered if they are, even though they are not dependent. But parents, grandparents, brothers, sisters are covered only if they are wholly or mainly dependent on the said person. In that case only it is covered. I hope this is clear. Okay. Then, so that is your family definition. Then local authority definition, please go through. All these things are covered under this particular aspect. So here, local authority, panchayat, municipality, municipal committee, cantonment board, all these are covered under the local authority. As per the constitution, all these comes under the local authority. Just go through it. Not very relevant from the examination point of view, just for you to understand what exactly is the local authority defined under 2 subsection 16 of the CGST Act. The term local authority is used in multiple cases like your exemptions, services performed by the local authority, etc. That is why it is important. Fine. Before we go to the definition of business, let me see if there are any further queries. Building sale by builder will cover both under, although it is immovable. If a builder is selling the building, 2 things we have to see. One, whether if he's selling after the completion or whether he's taking any advances as per the schedule of construction. If he's selling the building after the construction, it is an exempt supply. We'll see that in the coming chapter now. In the respective 3 schedules, it will be covered. But if he does as per the schedule of construction, then it will be chargeable to GST. Fine. So going forward. So therefore, definition of business is important. 2 subsection 17 business It includes trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not it is for a pecuniary benefit. Pecuniary benefit means some sort of profit or some sort of profit. So business, if you see, it covers any trade. Commerce, manufacture is covered, profession is covered, vocation means any skill you have, that is covered, adventure, wager, any other similar activity, whether or not it is for a pecuniary benefit. Any activity or transaction in connection with or incidental or auxiliary to the subclause A. So if here what happens is any activity in connection with the A, which is incidental or auxiliary, that is covered here. Then any activity or transaction in nature of subclause A, whether or not there is volume, frequency, continuity, or regularity of such transaction. So the trade, commerce, manufacture, it doesn't depend on how often you do the activity, how continuous you do the activity, or how regular you do the activity. Even if it is a single aspect, single transaction also is there, like you're selling one car. That is also a business, fine. If you are opening one shop, selling some products, closing the shop in 2 months, that also comes under business. So volume, frequency, continuity, or regularity are not required in case the business is, if it is to be categorized under business. Then supply or acquisition of goods, including capital goods and services in connection with closure or commencement of business. So therefore, in this particular situation, if you are supplying the capital goods, if you are acquiring the capital goods, in this particular situation, in relation to the commencement of closure of the business, this also is covered under the business. Then similarly, provision by a club, association, society, or any other body of the facilities or benefits to its members. So a club is there, it provides the facilities to the members. Fine. In this particular situation also, it is a business. Admission for consideration of any person to any premises. So if admission fee, if any concert is there, a concert is being, a music concert is there, or some sort of event is there in any premise, cricket match is there in any stadium. So here what is happening? You're admitting that person for some consideration to the premises. It is coming under business. Then services supplied by a person as a holder of an office, which has been accepted by him in the course or furtherance of his trade, profession, or vocation. Okay. So if I am holding an office, I'm providing certain services. Okay. And I've accepted that in the course of my trade, it comes under business. Then services provided by a race club by way of totalizator or licensed bookmaker in such sub club. So who is a totalizator? If you go to a race club, you put the bets on the horses. Once you put the bets, the totalizator gives you the rates and he charges some fee for that. That also comes under business. Then any activity or transaction undertaken by the central government, state, or local authority where they are engaged as public authorities. So all these comes under the term business. So therefore, if you see, it is a very, very exhaustive term. It is an inclusive definition and covers multiple instances as to what comes under the term business. The term business and consideration are very, very important because they form the integral parts of the definition of supply. So therefore, you need to be very, very clear as to what is the definition of the term business and what is the definition of the term consideration. 2 subsection 31 defines the term consideration in relation to the supply of goods or services of both. Consideration includes any payment made to or to be made, whether in money or otherwise, in respect of, in response to, or for the inducement of the supply of goods or services of both, whether by the recipient or by any other person, but shall not include any subsidy given by the central government or a state government. So therefore, consideration is there. What is consideration here? Payment which is made or to be made, whether in money or otherwise. So therefore, consideration need not be only in money. If you are providing some services, it need not be as if it is only for monetary thing. Consideration can be some other way also. Fine. So if you are providing any service, instead of giving you money, if that person gives you a gift, that is a non-monetary consideration. That also will come here. Therefore, any payment which is in money or otherwise, in respect of, in response to, or for the inducement of the supply of goods or services, whether by the recipient or any other person, but shall not include any subsidy given by the central government or state government. So subsidy will not be covered in the definition of a consideration. What is a subsidy? The government gives a reduction in case you do a particular subsidy. Then the second point is monetary value of any act or forbearance. Means what? If you are supplying the goods or service, you are not getting any consideration, but you are doing something for which a monetary value can be attached. In that particular situation also, it is consideration. Deposit given in respect of supply of goods or services or goods shall not be considered as payment made for such supply unless the supplier applies such deposit as a consideration. So therefore, let us take an example of a rental deposit. Now, you are entering into a rental agreement. In the rental agreement, you attach a particular deposit here. You give a rental deposit. That rental deposit is not consideration. Rental deposit is not a consideration. But if that deposit is adjusted towards the rent, sometimes the agreement talks about rental deposit and also advance rent. If 3 months advance rent is taken, later is getting adjusted against the further rents payable, then it is very much a payment of the supply and very much a supply. Okay, so therefore only if you are just giving it purely as a rental deposit, in that particular situation, there is no question of GST here. Fine. So some points in 2 subsection 31 which speaks about the consideration. It refers to the payment received by the supplier in relation to the supply, whether from recipient or any other person. Therefore, sometimes even a third party can also contribute towards the consideration. So payment received by the supplier in relation, whether from the recipient or from the third person. Consideration, therefore, is not the amount which is paid by the recipient, but the amount which the supplier collects. How much the recipient pays is not important. How the supplier is gaining. Sometimes the supplier will get from a third person. So if I'm selling any product to you and you have taken some loan, you have given a loan to another person. So you can tell that other person to pay me instead of paying me directly. So therefore, that also comes under the consideration. So what recipient pays is not important. What the supplier gets is important. So consideration can also be in the form of money or otherwise. In a joint development agreement, when the owner gives the land on development, he gets the flats allotted, which is of a non-monetary nature. This non-monetary nature also shall be treated as a consideration for the development rights. So what are the important points? For further important points in 231 is deposits, as I said, is not liable to tax. But if deposits are applied as a consideration, it will be liable to tax. So just because you change the nomenclature of the payment as deposit will not change the receipt of this. Trade practices and the terms asset plays an important role, whether it is a deposit or an advance or any payment for the consideration of the supply. So these are some points in the definition of the term consideration. Actionable claim is also same meaning as given in section 3 of the Transfer of Property Act 1882. As per the Transfer of Property Act, there is an elaborate definition of the term actionable claim. Same definition is covered here. Just go through it, not relevant as such from the examination point of view. Just have a basic understanding of the term. 2 subsection 72 defines the term manufacture. As I told you prior in this session, manufacture term was a very, very elaborate definition which is given in the central excise, and close to 100-150 case laws were there only to explain the term manufacture. But as per the GST, it is a very, very simple definition. It only talks about processing of raw material or inputs in any matter, which results in emergence of a new product. So the main criteria of the term manufacture is that emergence of a new product is happening. So whenever emergence of a new product is happening, then the term it is called as manufacture. Another important point is having a distinct name, character, and use, and the term manufacturer shall be construed accordingly. Okay, so emergence of a new product, distinct name, character, and use, term manufacturer shall be construed accordingly. Manufacture term, as I told you, has lost its significance in the GST regime. It is a precondition for deemed exports. and maintenance of account. So why it is important from the GST regime? First point is, in case of you're doing deemed exports, which we shall see in the imports exports related topic, there the manufacture is one of the conditions to be fulfilled in case you are into manufacturing. So there the term manufacture is important. Also in accounts and records chapter, we will see what all records are to be maintained by a manufacturer as per the GST. So there also this term is used. And also in section 10 composition scheme, manufacturers, traders are also covered. There the word manufacturer is given. Another definition is 2 subsection 75, which speaks about money, Indian legal tender or any foreign currency. Very simple definition. Important point to notice, it shall not include any currency that is held for its numismatic value. That means if you're holding any currency, if you're a collector of currency, if you're holding some coins, notes, etc. for the heritage value and not for the purpose of like purchasing goods or services, that shall not be covered in the term money. Taxable supply, again, very, very important definition, 2 subsection 108. It means the supply of goods or services or both, which is leviable to tax under this act. That is your taxable supply. It must involve either goods or services or both of them. Such goods or services should not be specified under Schedule 3. Okay, so it is either goods or services both. It shall not be specified under Schedule 3. Schedule 3 talks about the goods or services which are not goods, not services, not fall under that. It should fall within the meaning of supply in section 7. What we will see now, we'll see. That is our next point of discussion is section 7. The supply should be leviable to GST. That is, it should be covered within the meaning of non-taxable supply as defined under section 278. It should not be covered. That means the supply should be leviable to GST. It should not be covered under the non-taxable supply defined under 278. Taxable territory, 2 subsection 109, again the territory to which the provisions of the act apply, that is to the entire country, wherever the provisions of act, the GST law applies to entire country, including the state of Jammu and Kashmir. Then 2 subsection 84 defines the term person, includes individual, HUF, very similar to the definition in income tax. Individual, HUF, Hindu undivided family, company, firm, LLP, etc. Association of persons or body of individuals, any corporation established or any government company as defined under 2 subsection 45, any body corporate incorporated by or under the laws of the country outside India. So all these are covered under the person. Cooperative society registered under the law relating to cooperative societies. Local authority, as we saw in the earlier definition, central government or state government, society defined under the Societies Registration Act 1860, trust, and every artificial juridical person not falling within any of the above. Then 2 subsection 93 refers to the recipient of supply of goods or services. It means what? Where a consideration is payable, the person who is liable to pay that consideration. So wherever the supply of goods or services happen and any consideration is payable, the person who is liable to pay the consideration is the recipient. Sometimes where no consideration is payable, the person to whom the goods are delivered or made available or to whom possession is given also is the recipient of service. And the person where no consideration is payable for the supply of service, the person to whom the service is rendered is considered as a recipient of service. And any person to whom a supply is made shall be construed as a reference to the recipient of supply, shall also include an agent acting on such behalf of the recipient in relation to the goods or services or both separate. So this is the definition of recipient of supply of goods or services under 2 subsection 93. Any queries here till now? This is just discussing the definitions. Inducement of supply, very important point. Inducement of supply means if you are going to get any amount, you are inducing that person, you are convincing that person for the supply of goods or services. Inducement means you're convincing that person for the supply of goods or services, for that you're offering something, right? That comes under the term consideration. So that refers to your term consideration. Then 2 subsection 102 defines the term services. It means anything other than goods money and securities. It includes activities relating to the user money or its conversion by cash or any other mode from one form currency or denomination to another form currency for which a separate consideration is charged. So therefore, anything other than goods, money, and securities are services. Also includes activities relating to the use of money. That means if you have a foreign currency exchange service, rupees converted to dollars, dollars converted to rupees, for which you are charging something, that also comes under the term services. 105 defines the term supplier in relation to the goods or services or both shall mean the person supplying the said goods or services or both shall also include the agent acting as such on behalf of the supplier in relation to the goods or services or both be supplied. That was your 2 subsection 105, which defines the term supply. So with this, we come to the end of the definitions in this particular chapter. Section 7, we will take up in our next session, because now you will have a brief interaction with Ms. Shefali Jain from the Board of Studies ICI to discuss the various, how you will take advantage of the live coaching classes. So kindly wait for that and kindly make sure you attend to it and make sure the new developments what the CA Institute have brought in for the students. So she will take over now. So just to summarize what all we have discussed in today's session, we have seen the first chapter, that is GST in India. What exactly is GST? What was it before 1st July 2017? Shefali ma'am, just 2 minutes, I'll conclude and then you can take over. So then
yes, you can continue.
Yeah, so then we looked at the order of utilization of credit, the types of GST which were proposed in the government, in the law, and also to where all the GST law applies. We saw the constitutional amendments which was made with regard to the GST in India. We saw the concept of GST Council, the GST network. That was dedicated to our first chapter. Second chapter, we came to the supply and we went through the various important definitions. Amongst all the definitions, the definition of business, the definition of consideration is important. This is what you'll have to look at it carefully. And then our section 7, we just stop there. We shall take up section 7 on Wednesday, that is day after tomorrow, 12th April at 6 p.m. Now I hand over to Shefali ma'am to discuss regarding live coaching classes. Thank you very much, all of you. See you on Wednesday at 6 p.m.
Thank you, sir. Thank you so much for this wonderful session. And good evening, students. So after this enriching and technical session, so I think you must be feeling very confident about this subject, that is now you'll be able to do this subject in a proper manner. So today, since it is your first class, so there are certain points which I feel as a Board of Studies faculty, I should apprise you of. First thing I would be telling you is that how you can take the maximum advantage or maximum benefit from these classes during your preparation. And I would be telling you certain other points which are relevant for preparing this paper 8, Indirect Tax Laws, which is covered at the final level. So these would be the section-wise weightage, that what is the weightage of each of the topics in your examination. What are the skills which you may be tested, whether direct questions or application-based questions, what is the weightage for each type of questions in the examination, and what is the applicability of the Finance Act for this particular paper. So without wasting any time, we are starting with this session. So first of all, let me share my presentation with you. Yes. First is the applicability. Since you know that this live coaching classes 5th batch for final is applicable for November 2023 examination. So students who are going to appear for November 2023 examination, they should definitely focus on these classes. And what is the position of law which is applicable for the November 2023 examination? So definitely Finance Act 2023, which has come through budget 2023, this February budget, it is not applicable for November 2023 students. And what is applicable in that case is the applicable position of law, which students need to take into consideration while answering the questions for November 2023 examination is all questions have to be answered on the basis of position of law. GST law, which is amended by Finance Act 2022, and the significant notifications and circulars which have been issued up to 30th April 2023. So what is the cutoff date for the November 2023 examination? It is 30th April 2023. All the amendments which have taken place in the GST law up to 30th April 2023, and whatever amendments have taken place through the Finance Act 2022. This year's budget, whatever amendments it has proposed, they have not yet been effective also, but nevertheless, they are not at all applicable for November 2023 examination. So for November 23, Finance Act which is applicable is Finance Act 2022, and the notifications and circulars issued till 30th April 2023. Same is for Customs law also. Finance Act is Finance Act 2023, 22, and the notifications and circulars issued up to 30th April 2023. So this is the applicable Finance Act and the amendments for this particular examination. And this will be covered during these classes. Now, some of you might be wondering that these classes we have started in April. Today we are on 10th of April. And I'm telling you that the position of law which is applicable for the examination for November 2023 examination is 30th April 2023, which is yet to come. So what about these 20 days amendments, some notification circulars, because you know that GST is a rule-based law, and so many notification circulars, they keep coming throughout the year. So maybe possible that we have some notifications and circulars issued by the department during these 20 days time. So how will they be covered? So those amendments, whatever amendments are there or they get carried out in these chapters, which we will be covering in this month till 30th April, for them we will be having a separate class and we will be covering those amendments afterwards, because it is for whatever position is there till the date of the class, that will be covered in the class, and whatever amendments take place after the class, they will be covered in a separate session afterwards. So don't worry, you will not be deprived of any important amendment or significant notification circular for the examination. Whatever is relevant for your examination will be covered in these classes. So the point which comes is that how can you make the effective use or best use of these classes in your preparation? What you require, what we expect from this paper from a final student is that he should have a conceptual clarity in the paper. You should have each and every concept clear. You should know each and every concept with full clarity. And for this, what you have to do is you have to read your study material, as well as you have to go through these classes carefully. I would advise all of you to attend these classes live as much as possible, though recorded lectures are also available. But if you attend the classes live, it will help you in getting your queries resolved then and there itself. So you can understand the concept and you can get whatever query comes to your mind. You don't have to procrastinate your queries. You can ask your queries in the class itself, and that will give you a sense of contentment as well as motivates you to keep your studies with full pace. So you will be keeping your studies along with these classes. So since you know that we have almost 7 months for the examination, for November 2023 examination, that is why we have started these classes early, so that you students get the maximum time or the whatever sufficient time for preparation for November 2023 examination. So if you start your preparation today and you go along with these classes, whatever topics are being covered in each class, if you go along with these sessions, then definitely you will be able to cover your syllabus within 3.5 to 4 months, first round of your studies. And thereafter, you will get sufficient time for the revision also. So what you have to actually, how the question again comes is that how you can make the effective use of these classes. So first is that you should know your syllabus and the expected level of knowledge. Now, what is your syllabus? Some students still have this confusion in mind that whether the new scheme of education and training, new syllabus is applicable for November 2023 or not. So I think by now, most of you have got this clarity that new syllabus is not applicable for November 2023 examination. You have to continue reading the existing syllabus. So syllabus is there in your study material. It is given at the beginning of your study material. You should first of all go through that syllabus, that what is actually covered in your syllabus. And in paper 8 at final level, we have 2 parts that sir has already told you: goods and services tax and customs and FTP. So goods and services tax comprises of 75 marks of the total weightage, and the customs and FTP, foreign trade policy, this has the weightage, that is part 2 of your paper 8, and that comprises of the weightage of 25 marks. So you should know that what is the weightage of each section in your or each part in your syllabus, and you should know what is the expected level of knowledge. Now, expected level of knowledge, when I say, means that what is the skill level which you have to develop for appearing in this examination. For that, we will be having in succeeding classes, we'll be telling you that what type of questions are expected from you in the examination and how you have to answer them. What are the things you have to keep in mind while answering the questions. All those things we'll be covering in subsequent sessions. But in this session, because it is the very first session and you have just started your preparation, I'm assuming the November 23 students have just started and this is your first session. So I will be telling you the things which are relevant today. So what skills are expected, that an overview I will give you in subsequent slides that you should know before starting the preparation, and I will tell you that in today's session. And you should also know the applicable Finance Act and relevant notifications and circulars. So this we have already done, that the Finance Act which is applicable is Finance Act 2022 and notifications and circulars issued up to 30th April 2023. They are applicable and they will be covered in these live coaching classes. So what I would suggest is that before any class for any topic which is going to be covered in a particular class, what you should do is you should first of all go through that particular topic or that particular chapter from the study material before coming to the class. Just give a plain reading to the entire chapter, and there will be certain points which you will not be able to understand. You will find some doubts in that session because you are just giving a plain reading to the chapter. For those points, you can get the clarity from the class. So before coming to the class, I would advise you that you once go through the chapter and then you come to the class. So after going through the chapter entirely, when you come to the class, you will be in a better position to understand the concepts discussed and you will have a better grip on the concepts. So after coming to the class, attend the session carefully. Each and everything is useful for you. Each and every concept will be explained in the class. Whatever doubts you had after reading the study material, you might be having some questions in your mind that why this is happening, why what is the supply, why which particular activity is supply. So you can get all your queries also resolved during these sessions. So attend each and every session very carefully. I would advise you that you should try making notes also during this session. So keep your pen and paper ready and keep making notes along with the session. Though you will be getting PPTs for the reference also, but those PPTs are only for your reference. During the class, if you keep making notes, then that will help you in better retention. Whatever we write, we tend to retain that in a better manner. So I would suggest that you should prepare your notes along with the class. Whatever topic is covered in the class, keep making notes in the class itself. Now, after the class, once the class is complete, then what you should do is you should once again read that chapter or the portion of that chapter which is covered in a particular class. Those topics you should see from your study material. And now when you will do this, then you will find out that you have or you're almost clear with everything. So when you read the study material, then whatever notes you had prepared during the class, you might feel that certain points you want to add to those points, those notes. So you can add those points because there is always a possibility that you feel that this point you have skipped during the class, noting down that point during the class. So you can add to your notes. And after completion of each chapter, you should complete the summary notes for that particular chapter. Now, how will you prepare those summary notes? You have taken notes during the class. You have added some points to those notes when you had read the chapter again. And at the end of each chapter in the study material, you will see there is a section called Let Us Recapitulate. Now, this section has a summary of the entire chapter, the key concepts of the complete chapter in diagrammatic form, tabular form. That is also that is very helpful for you in preparing your summary notes. So one way you can do is you can prepare your own summary notes using your session PPTs, your own notes during the session, as well as the Let Us Recapitulate section. Or if you feel that no, you are more comfortable with the Let Us Recapitulate session and adding some points there, then you can do it that way also, that you can keep your Let Us Recapitulate section of the study material and you can add the points which you have, you feel that you want to make it more comprehensive. Whatever points you have learned during the session or in study material, you have found something more, you want to add it to your summary. So that way you should have a complete summary of the entire chapter. So this way the concepts of the chapter will be completed. Now after that, we come to the assessment of the concepts which you have learned. Now, how can you assess that? For that, we have the test your knowledge section given at the end of the study material. In that section, we have the questions given to you relating to that particular topic. Now, since you are clear with your concepts, so now you should try attempting those questions. And what is the way of attempting those questions? You should only see the question and then you should try attempting the answer. Try working out the answer it depends on the time which you have. You can attempt in a fair manner, or if you feel that you don't have that much time, then you can simply put the values at some page and then you can try to arrive at the final answer. And then you see the answer which is given in the study material. Don't try to see the answer before attempting it on your own. Because if you see the answer, if you see the question and simply see the answer, you will feel that you know everything. But if you try solving the question on your own, then you will come to know that what are the areas where you still lack or the areas where you need more focus. So for that, I would always suggest that you should first of all solve the questions on your own and then you should compare your answers with the answers given in the material. You'll be able to understand the areas where you still lack or where you have to study more, where you again have to go through the material or class, because you know that these classes are available in recorded form also. So in case you feel that some topic has been left out or during the session itself, some topic you feel that you again want to go through that topic, you are not able to take note of that topic in your notebook. So you can see the recorded form in lecture also, but do attend the class in live form because that will help you in taking out, resolving your queries. So you can attend you should attend it in live form as well as afterwards, you can see the recorded lecture also if you feel that something has been left out and you want to again go through the portion. So this is what I have also recommended, that you should compare your answers with the answers given in the test your knowledge answers portion. Now this way, this is the complete cycle for every chapter. Read the chapter for once, then attend the class carefully and try taking notes of the during the class. Then once again going through the chapter after the chapter is complete in your class and try making summary notes for that particular chapter so that your conceptual portion, your theory portion is complete. After completing the theory portion, now you should come to the questions part, which is given in the test your knowledge section. And that I have already told you that try attempting the questions on your own and compare your answers with the answers given in the material. And wherever you find that you still have to study more some topic, you feel that you still need some more focus on that topic, then you should once again go through that portion and you can you can amend your summary notes also to that extent because you feel that you need to add something to your notes in this particular portion. Now, when you're doing the questions, one more exercise you have to do is that you feel that certain questions you had some tricky points and you feel that you were not able to understand it in the first instance and they are relevant for you in your future revisions also. So you should mark those questions, that these are the questions which I found good. These are the good questions. I would like to refer them in my revision, first or second revision also, because what we feel is what you should do is you will be able to complete your entire syllabus within 3.5 to 4 months period. After that, you should revise your syllabus twice and you will get the time to revise the syllabus because you have started very early. Your preparation, you have started well in time, in fact, not early, but I would say well in time you have started your preparation. So you can have 2 rounds of study. So in revision period, you want to see those questions because you feel that yes, they have certain points which you might get stuck up during the exams also. So you want to see those points again and again. That will make you familiar with those points. You will get familiar with their treatment also. And then you will not commit any mistake during the exam time in those type of questions. So mark those questions which you feel that they are good and they have some tricky points in them. Those questions you have to see in your revision time also. So one should plan to complete 1 round of study and 2 rounds of revision before the examination. This is the ideal study plan which we feel that every student should have. And in first round of study, you have understood the concept, your summaries are ready for each of the chapters, and you have done all the questions which are given in the test your knowledge portion. So entire syllabus, now you can have first round of study after completion of these classes. With first round of study and second round of study, 2 rounds of revisions will be there. That will make you completely prepared for this particular paper. And you will find that each subsequent revision, the time you will take in first revision will definitely be very less as compared to the time which you are taking in these classes. And the time in second revision will be lesser than the first revision. So each subsequent revision will take lesser time and will increase your confidence. You will be having more confidence and you will be taking less time to do that particular revision time. So during your revision, during your first revision, as I already told you, that you have to work out the test your knowledge questions once again, and especially the questions where you found some problem, where you were stuck up somewhere, you could not find the answer in the very first instance, some tricky points were there. So those questions you have to do once again. Now after that, so this is how you have to take advantage or benefit of these classes for your preparation for this paper. After that, we come to the applicable BOS publications. Now, with these classes, you have to take into consideration all the BOS publications which we have provided you for your preparation. And these are, first and foremost is your study material. Now, which edition of study material is applicable for you? It is October 2021 edition of the study material that you have to refer, along with the supplementary study paper 2023. So this time study material, this is October 2021 edition, because we get this query from lot many students that what is the applicable study material edition and from where can we get the amendments. So you will get all the amendments compiled at one place in supplementary study paper. This study paper, since we have already issued it, so it contains the amendments up to 31st October 2022. But for you, you know that amendments which are applicable are up to 30th April 2023. So those amendments are there. These 6 months amendments will be there in statutory update for November 2023 examination. So this statutory update will be posted afterwards on the BOS knowledge portal. You have to keep checking the BOS knowledge portal for various updates and various announcements which keep coming. And this statutory update will also be posted there. At present, we have the study material as well as the supplementary study paper. These 6 months amendments we'll be making available very shortly after 30th April, because we have to take into consideration the amendments up to 30th April in this statutory update. So this statutory update will be available after 30th April 2023. And you have to refer these 3 publications for your examination. Next comes your MCQ and case scenario booklet, because you know that in this paper, the 30% weightage is of MCQs and case scenario based MCQs. So for that, we have come up with a separate booklet, MCQ and case scenario booklet, which has independent MCQs as well as the MCQs based on the case scenarios. Now this case scenario booklet, for this we have some updated MCQs also we have hosted on the website separately. And you will get the case scenarios and MCQs which are there in your mock test papers, revision test papers. There also we have taken some of the updated case scenarios as well as the updated MCQs. So I would advise all of you to refer to the 2 series of the mock test papers, but this mock test papers are there for the May 2023 examination, because everything for November 2023 examination will start after 30th April, which is the cutoff date. As of now, we have the MCQs which are updated up to 30th October 2022, because that was our last cutoff. That was the cutoff for May 2023 examination. So revision test paper and mock test paper, these are also there. But for revision test paper and mock test paper for November 23 will be issued few months before the examination. So in these revision test paper and mock test papers, you will again get some updated questions for November 23. Some more updated questions will be available for you. As of now, whatever is updated is for May 23. For November 23, once the cutoff date gets passed, then we will be having the updated publications. Now, where can you get the digitized form of these publications? So that is BOS Knowledge Portal. As I already told you, you will get everything at one place. This is your this is the one platform where you can get everything about your final course. All the publications, amendments, then mock test papers, revision test papers, capsules, everything is available on this particular portal. Now, this is the link to this portal. And if you see that here is the on very left corner, you have a tab of BOS mobile app. Now, BOS mobile app, many of you would have downloaded, and you must be watching these classes in BOS mobile app also. But those who are watching through YouTube, or they are going through this registering and then going through the live coaching classes, for them I would suggest you download the BOS mobile app, because there you will find everything at one place. All your learning resources, digitized form, you'll get it. This is the one-stop solution for all your problems or all your resources relating to CA course. You will get everything in this mobile app. So I would suggest all of you to download this BOS mobile app and then attend the classes through this app. So there you will get all the resources at one place and you can attend the classes also through this. And here on the very left, you have the toll-free number where you can get your general queries resolved. So this is the homepage of the BOS knowledge portal, and you can see that you will get all the resources available here: study materials, syllabus, then journal and capsules, MCQ and case, all the publications, they are available in digitized form on BOS knowledge portal. Then the BOS mobile app. BOS mobile app, I told you that you download it from BOS knowledge portal. Just a minute. So hope all of you were able to see the BOS knowledge portal site. I'm not sure whether that was also being shared or not. So you can tell me in the chat box whether you were able to see that site, or you can go through that site. Most of you must be aware of the BOS knowledge portal site. And regarding the toll-free number, all the announcements regarding the examination and regarding board of studies activities, publications, whatever new resources are available to you, everything you will get at this BOS knowledge portal. So I would advise you to visit the website, keep visiting the website frequently, or you download the BOS app, then you will get all the notifications of anything new which comes, any new publication, all the classes, then also you can stay updated through this app. Now we come to the next point, which is the section-wise and skill-wise weightage. Now, because whenever we start studying, first thing which comes to our mind is that we should get to know some important topics. Though we do not encourage the selective study, we say each and every topic is very important. But yes, we have prescribed section-wise weightage for the students to know them that yes, this is the section from which the maximum weightage will be there in your question paper. So the section from which maximum the questions for maximum marks will be asked, that is there in the section-wise weightage. This section-wise weightage is also available on BOS knowledge portal, and I will be taking you through the section-wise weightage once. Now see, for part 1, goods and services tax, Namrata is telling that you are not able to see the BOS knowledge portal. At the end of the session, Namrata, I will stop sharing this PPT and I will be taking you through BOS knowledge portal once, so that you can know that what all will you get at BOS knowledge portal. But for the timing, let us continue with this PPT. So this is the section-wise weightage. So I told you that section-wise weightage tells you which all topics are more important for your examination, or how much time you need to devote for a particular topic, which topic you need to focus more, or which topic you can do and in the last. So in part 1, goods and services tax, first section 1, see the weightage of this section. This section has a weightage of 45 to 65%. So almost half of the GST paper will be coming from this section. So see how important this section is. Why it is so important? Because it contains all the substantive provisions of the law. Now, when I say substantive provisions are the basic principles which govern the provide the fundamentals relating to a particular law. So in GST law, what is the basic principle is what is the taxable event? What is the charge of GST? On what basis we charge GST? How do we collect it? Then the concept of mixed supply, composite supplies, nature of supplies, then the reverse charge provisions, exemptions, composition levy, time, value, and place of supply, input tax credit, again a very important topic. So these are all the substantive provisions around which the GST law revolves. So this has been given the maximum weightage in your question paper, and you will be asked 45 to 65% of the questions from this particular portion. So obviously this makes you understand that yes, these are the concepts you have to go in greater detail, and most of these provisions will be covered in this month. So try to pay full attention to these topics. As I told you, read them once before the class and then attentively attend the class and make notes. So this way you will be able to cover these provisions in a greater detail. Okay, and then the next section. Now next section is section 2, and this contains the section 2 has a weightage of 10 to 30%. So because it covers the procedures under GST. So now procedural law under GST is what? Now, what the procedural law means, that how you have to, the provisions, or you can say the set of rules which help in implementing the law, in administering the law. So we know that on what event GST would be levied, then at what time we have to pay tax, what is the place of supply, then on what value we have to charge GST. Now, actually, the implementation of this law will be when we take the registration, when we issue the invoice, then we actually make the payment and we file the return. So these are all the procedures which are there in the GST, and this section is there in section 2. These provisions are contained in section 2, which has a weightage of 10 to 30%. Then comes the third section. Third section has a weightage of 10 to 25%, and these are the enforcement provisions. This section has the enforcement provisions like demand and recovery, offenses and penalties, advanced ruling, appeals and revision. So after once you have taken the registration, you are paying the taxes. So in case you make any default, then demand and recovery, offenses and penalty provisions come into play. Then advanced ruling is there, appeals and revisions is there. So all these provisions are there in section 3. It has a weightage of 10 to 25%. Last is the basic concepts of GST and the assessment, audit and inspection. This portion has the least weightage. Now this section has the least weightage of 5 to 10%. So accordingly, you have to prepare these topics depending on their weightage. You have to cover everything, but the more the topic or the section which has the highest weightage, for that you have to do everything in greater details, and you have to focus more. You have to solve more and more number of questions in that particular section, because you know that the paper would be having almost half of the paper will be based on those provisions. So you have to have more focus on those topics. Same as the weightage. Similarly, the weightage for section B, part 2, that is customs and FTP, that carries 25 marks. And here also the first section has the maximum weightage, 40% to 65%. So almost similar to what we had in GST. For section 1 had the maximum weightage of 45 to 65. Here it is 40 to 65. So almost similar weightage. And this is the most important section. It has levy and exemption provisions, and types of custom duties, classification, as well as the valuation provision. So all the substantive provisions are there in section 1 again, in customs also. And in section 2, we have the procedural aspects, import and export procedures, warehousing, duty drawback, refund, and the export promotion schemes of the foreign trade policy. So this is what is there in section 2. It has a weightage of 20 to 45%, again, an important section. Third section has the least weightage, which has the basic concepts of the customs law, as well as the basic concepts of the foreign trade policy. Okay, so this the section-wise weightage is over. Now, this can help you in preparing for the examination. Next is the skill-wise weightage. Now, skill-wise weightage, when I say, that means what is the weightage of each of the skill which is expected from you during the examination, or based on which the questions will be set in the examination. There are 3 types of skills which will be tested at the final level. One is comprehension and knowledge. Second is analysis and application. And third is evaluation and synthesis. So comprehension and knowledge is the first level, which means that the student should know the provision. He should be able to understand that provision and elaborate or reproduce that provision in the examination. But it has a very less weightage. As one of you had asked that whether direct questions will come in the examination or not, and sir has rightly told you that this is not what is expected at the final level. At final level, you are expected to have more of the application and analysis skill, and to some extent evaluation and synthesis skill. So higher order skills are more expected from you than the basic level skill of comprehension and knowledge. So that is why it has the least weightage of 10 to 30%. And you can see the maximum weightage is of the application and analysis skill, that is 45 to 75%. So most of your paper will be based on application and analysis. What is application and analysis? It means that you know the provision, you will be given a small scenario, and you have to apply that provision to that particular scenario and answer the question. It can involve computation also, and it can be without computation also. You have to apply a particular provision to a situation, and you have to arrive at a conclusion, or you have to advise your client in that particular situation. So it may not always require computation, but it will require the application of the provisions which you have learned. Third is the evaluation and synthesis. Now, evaluation and synthesis, if you see, it is only asked in the GST portion. It is not asked in the customs portion. So this higher order skill is tested only in GST portion. For customs, we expect the students to know only up to second level of knowledge, that is application and analysis. Second level of skill is being tested, but evaluation and synthesis is only for GST. What is evaluation and synthesis? It is the application of the more than 2 or more provisions of law. So there is an integration of many provisions in one question, and you have to arrive at the final conclusion after using all the information which is provided in the question. Now, if you have seen any of your past question papers, or if you get to see your past question papers, they are available on website, you can see them. Those of you who have not seen the question paper, I've written first question of your question paper is based on the evaluation and synthesis skill. It tests lot of provisions of section 1. And finally, you have to finally, this question asks is net GST payable in cash. So this question tests the evaluation and synthesis skill. That is why it is very important question. And generally students find this question very ticklish, or they find it very tricky, because they have to integrate so many provisions. And this is actually what you have to do in the real life also, that when you are where you have to gather all the information from the client's books of accounts, and you have to finally arrive at the GST which has to be paid by the client. So that question requires in fact, tests all your understanding of all your substantive provisions and some of your procedural law also. And if you see that this type of questions you will find in ITC chapter also, test your knowledge section of the ITC chapter. But that I would suggest you that you see those questions only when you are through with all the preceding topics. So once you complete chapter 8, that is ITC, after that you see the questions of your test your knowledge, and then you will see such type of questions where you have an integrated application of all the substantive provisions, and you have to arrive at the GST liability. Those type of questions are also asked in the examination. So you can see that yes, a high level is expected from you at the final, and you have to read your provisions accordingly, because if you have the conceptual clarity, you will not find problem in solving any of these type of questions. You should know the independent provisions, and then you should know their comprehensive application also. And that you will know from these type of questions. We have these questions in chapter 8, ITC. We'll get those questions there. Now, study guidelines. So what is study guidelines? These are the topics which are excluded from your syllabus. So we generally are, as a student, we all are interested in knowing that what we do not have to study. We should know what we have to study that we get from our syllabus. But something which actually amuses us, or which we find interesting, is that what we do not have to study. So that is there in these study guidelines. Study guidelines is something which you do not have to study, which is not part of your syllabus, or which have been excluded from your syllabus. Though they were actually part of your syllabus, now they have been excluded by way of the study guidelines. Now, if you see it carefully, these study guidelines are for May 2023 examination. They are not for November 2023. Reason for the same is because, again, the same, that cutoff date has not yet passed. So we will be in a position to better understand or decide that what all will be applicable for November 2023 examination once the cutoff date passes. So I am just giving you an idea that how the study guidelines work, or what was there in May 2023 study guidelines. I want you to go through that, because certain things or certain topics will be excluded from November 23 also. So let us go through them. See, this is first is because I would all of you should pay attention to these topics, because this is something which you have to exclude while doing your preparation. Though you will not find these in your study material also, but still, when you are doing any question, when you are doing any practice, then you should know that yes, this is something which I am not expected to know. But first of which is rate of tax prescribed for supply of goods, as well as rates of tax prescribed for supply of services. So you should know that GST rate is not expected from you in the examination. In fact, in every computational question where you have to compute GST liability, you require rate of tax. So now what will you do? You don't know the rate of taxes because you're not expected to learn them. So definitely they will be provided to you in the question paper itself. And whatever rate is given to you, you have to apply that rate. Sometimes it so happens, generally we try to give the the original rates only, but in question, in examination, there could be some fictitious rate also which is given to you, some hypothetical rate. Then whatever rate is given to you in the examination, you have to apply those rates, because you are not expected to know the rate of taxes for supply of goods and services. This is just a rote learning one, and we do not have students to be stuck up in mugging up the rates of taxes. Similarly, the exemption for supply of goods, because this is a very long list which is there, and that is not in your syllabus. So exemption with regard to supply of services is there. It is part of your syllabus. It is chapter 4 of your study material, and that is important also. But for goods, you do not have to go through the exemptions. No rates of goods, no exemptions, and again, no reverse charge mechanism. So goods on which tax is payable on reverse charge basis, that also you do not need to know. Though there are only 6-7 items, but as a principle, we have excluded from your syllabus. So regarding goods, exemptions, reverse charge mechanism, as well as rates, you do not need to remember. For information, you can see, and you will find them in study material also. We have given the some examples of all these exemptions as well as reverse charge mechanism. Then rates also we have provided for some of the goods, but they are only for your reference or to give you an idea, but that does not form part of your syllabus, so you need not remember them. Next is in time and value of supply topic. Value of supply in cases where Kerala flood cess is applicable, that is not there in your syllabus. In ITC chapter, real estate provisions, reversal provisions which apply in case of real estate projects, that is very complicated for students to remember. So you can read them when you go in actual practice, but for students, for examination purpose, that has been excluded from your syllabus. Similarly, the manner of reversal of credit of additional duty of customs in respect of gold bar. In transitional provisions have also been excluded because they have lesser relevance now. In customs, now if you see customs, there are so many topics which have been excluded, though they originally form part of your syllabus. These topics are not covered in your study material also. But you should know, yes, if any of these topics you are studying from some other resource, then you should know that yes, these topics do not form part of your syllabus. So these are excluded. Demand and recovery provisions, appeals revisions, advanced ruling, settlements, search and seizure, all these provisions are excluded and you do not have to study them. In study material, they have not been covered because they are excluded. So you should, but for November 23, we'll be separately issuing the study guidelines because there could be some other topics also. Whatever amendments have taken place from 1st of November 2022 to 30th April 2023, in this 6 months period, whatever amendments have been carried out by the department, if we found that some of the amendments are not applicable for you, we will include them in this list. And so for November 2023, there could be some additions or deletions in this, some changes could be there. But some common things like I told you, rates of taxes and exemption for goods, reverse charge mechanism for goods, that is not going to change. Transitional provisions, that is still going to be there in November 23 also. And then I would request you to refer to the statutory update as well as supplementary study paper for the notifications and circulars which are applicable for your examination, because we prepare them with great caution that what all is applicable for your examination. So whatever provisions become effective till 30th April 2023, they will be made applicable for November 2023 examination. And those provisions only will be covered in the statutory update as well as the supplementary study paper. So these are the two publications you need to refer. Mithun is asking, will similar session be given to other subjects also? Mithun, that I'm not aware, but maybe if you feel so, you can request the subject faculty. How to manage study, and Namrata is asking how to manage study and articleship. Can you give some tips? Namrata, that is purely a time management thing that you have to see when can you get leaves before the examination and when can you start your studies. But if you start your studies well in time, before the examination, then you will not find managing the two simultaneously, because these topics, if you cover well in before the examination, then you will get time for articleship also as well as for the preparation also. But you have to start studying well before the examination. Then comes the question paper. So regarding the question paper, all key details I would be giving in subsequent sessions. But in this session, I just want to give you an overall idea that what your question paper comprises of. So the paper of indirect tax laws has two sections. First division is MCQ division, which has a weightage of 30 marks. That I already told you that 30% weightage is for MCQs. Two types of MCQs are asked: case scenario based MCQs and independent MCQs. Case scenario based MCQs are the MCQs where a small scenario will be given to you, and based on that 4 to 5 MCQs will be asked, and those MCQs will be application based MCQs. For them, you should first of all have to go through the case scenario, and then applying the provisions of law, GST law, you will be able to answer them. Case scenario MCQs will only be based on the GST provisions. There will be no case scenario based MCQ based on customs law. So this is an important point, that case scenario based MCQs will only be from GST portion. Apart from that, you will be having independent MCQs. Independent MCQs means you do not have to refer to scenario. There will be no scenario. Small questions will be there, either application based MCQs or comprehension and knowledge based MCQs. That means the direct provision based MCQs will also be there. So for GST, the MCQs will have a weightage of 25 marks, 2 scenarios and some independent questions. For customs and FTP, total weightage will be of 5 marks and only independent questions will be there. Only independent MCQs will be there. Second is the descriptive questions. Now that is division B. That has the weightage of 70 marks. Now, in descriptive questions, as I already told you, question 1 is an evaluation and synthesis skill question. And it is a compulsory question. So first question, it comprises only of GST. It tests only your GST provisions. And it tests the evaluation and synthesis skill of the students. This is a compulsory question and it carries 14 marks. Then in remaining 5 questions, you have to attempt only 4 questions. And each of these question carries 14 marks. So 9 marks for GST and 5 marks for customs and FTP. So this is the overall breakup of your question paper. But today I have given this to give you only an idea of how the question come in your examination, or what is all you have to prepare for the examination. But this session was only to help you in taking these sessions seriously and going through these sessions to come up in higher number in attending these classes in live form, because when you attend these sessions live, you are able to get your queries resolved. As I already stressed upon this point number of times, that please try to attend these sessions live. You will be benefited from these classes. You will definitely find these classes useful. Okay, so now let us see if some student have some queries in this. Gurdeep is asking, will all classes of other subjects be provided? This, Gurdeep, you can put a request for this, for these type of classes. So whom can you request? I think there is a, if you have BOS app with you, there is a live coaching class section in that BOS app. There you can put a request for these type of classes. In fact, whatever I have covered in today's session was just a part of it which I wish to share with you students regarding this paper. I will be covering more of these type of tips for your examination, because this is the starting of your preparation. You have just started with the preparation. So today I cannot tell you all the points. I just can apprise you with the, the points which you need to keep in mind before starting the preparation, and how can you prepare your study plan. Now, in the forthcoming sessions, we'll be telling you that how you can score good marks in the examination, what are the commonly committed errors by the students in the examination. For May 2023 examination, we have BOS for success session in the recorded form. You can see those students who are appearing for May 2023. But I feel very, I don't think any of you would be appearing for May 23, but you can share it with your friends if any of them are appearing for May 23 examination. For all subjects, we have BOS for success videos. And there the faculty has discussed, each subject faculty has discussed the, the points which students need to keep in mind, the tips which students can take advantage or benefit of while appearing in the examination. Very examination focused sessions are there. So I would advise all of you to go through those sessions. They will help you in your examination process. But those who are appearing for November 23, definitely these classes will be very useful. So with this, we come to end of this session. So any of you have any query regarding this? Ma'am, is 1 month sufficient for revision for both groups? Though I feel 1 month, if you have prepared during your previous revisions, because if you have done 2 revisions, then in second revision, maybe 1 week for each subject can be sufficient, but it totally depends on how you have prepared during your preparation time as well as the revision time. How thoroughly you have done the concept when you were doing it for the first time. Then how well you have prepared the summary notes, because I always recommend the students to prepare their summary notes on your own. Though if you see the let us recapitulate section of the study material, there also we have put in a lot of efforts to make it students friendly and useful for you. But whatever notes you prepare on your own, they help you in, you don't need to remember them. You don't need to memorize those notes. While preparing them itself, you will learn them. So better that you prepare your summary notes in a proper format and you be prepared for the examination. So during the last revision, you will have, even if you have very less time, you will be able to complete your topics within that. So 1 month can be sufficient provided you have prepared well during the study period. ICI study material enough for examination point of view? Tirupati is asking. Tirupati, ICI study material plus these classes, as well as the questions which have been asked in the past examination. That will be sufficient for you to understand the concepts. But don't expect that same questions will be appearing in the examination. You will know that these type of questions are asked. When you practice those questions, you can answer the other questions also. So similar questions or some questions, some similar type of questions can come. But yes, definitely you have to go through the ICI material thoroughly. You have to go through these classes thoroughly. Then you will be getting the complete conceptual clarity. So with this, we come to an end of this session. Hope all your queries are resolved. So thank you so much. Thanks for the patient listening. Thank you so much.